Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey everyone, welcome to Stocks Network Trading. Good morning, happy Friday. Jamal Mubarak. It is 6 a.m. Eastern, and today's a big day. It's day 2 of the Jackson Hole symposium / conference, and it is the day when Fed Chair Powell speaks today at 10 a.m. Eastern. So we still have a lot of time to prepare for that. We'll do our top-down analysis on gold, NASDAQ, and US30. And we'll move into COMEX. Then we have Wall Street market open. And then Powell will be speaking after 10 a.m., okay? I'm thinking today maybe we do something different I have not done in a long time. Maybe we bring it down when we do our top down on these securities to the 15-minute time frame. So it's not as fast as the 5 minutes or crazy with the 1 minutes. Maybe we'll focus on the 15-minute time frame, allow us more time to see what's going on without rushing quick candles, and then we can start to bring it down when we start getting into the exchange opens and things like that. Okay, we're gonna go on this call for over 4 hours, so we don't. I'd like to maybe slow it down on the 15-minute time frame and see how you guys enjoy it, and then let me know, and then maybe we can do more of these sessions like this on the 15-minute time frame. So okay. So thanks everyone. I know it's early. We went last minute to start a little earlier today, so we'll have more snipers coming in about an hour at our regular time at 7 a.m. But for now, we can get started. We can start to do a little bit of analysis together before the entire team joins us. Okay. So thanks everyone for being up early and ready to get started. So first thing is the news today. So what I was just talking about was today was a big day, day 2 of the Jackson Hole right over here. It is a red folder event. This is also the day when Fed Chair Powell speaks, okay? And he could be talking about the interest rates or give us forward guidance for what's going to happen in September or what he's leaning to do. Maybe cut rates, pause them, maybe speak a little bit about the inflation, maybe something about the tariffs, just anything. But anytime Powell is speaking, the markets pay attention, the markets listen to what he's saying, and they do move. So it is marked as a red folder at 10 a.m., okay? But prior to getting to Powell, we do have some news. At 8:30, we have some Canadian news. You can see it was pretty light coming from Europe, not much going on in Europe. As we come into North America at 8:30, we have 2 Canadian folders, core retail sales and retail sales. We do not have any US folders at 8:30 at that time. 9 a.m. we have FOMC member Collins speaks, and then the big one. Then we open Wall Street at 9:30, and then 30 minutes later, 10 a.m., I believe it's live. I believe you can maybe listen to this one. If anyone has a link and we're on at this time, maybe we can listen to first little bit of it. But it's Fed Chair Powell speaks, okay? And then after he's done speaking, the rest of the day, just mind you, it is a Friday. So, Fridays can be those tricky days to trade. Highly recommend if you make your daily goal on a Friday, also if you're approaching your weekly goal, then to achieve your goals and then be done trading for the week is my suggestion for everybody, and then get your weekend started on a positive note, okay? And also we have President Trump speaking at noon today, so he will be speaking as well, due to speak at the White House in Washington at noon, okay? And also Donald Trump, we have to pay attention to him anytime he's speaking as well, because he can talk about anything to do about the U.S. economy, about tariffs, about inflation, about interest rates, about anything to do with the entire world for the matter, and it can affect the markets, okay? So just keep in mind This is the news what we have for today. And also tomorrow, I know you won't be trading on a Saturday, but it's the final day 3 of the Jackson Hole Symposium. Everything wraps up and then we start going into next week, okay? Earnings today in the pre-market, we have already coming up is BJ's Wholesale Club at 6:45, Goldfields, Buckle Inc., RLX Technology, and so those are not big names to consider. They are names, but they're not the big ones that will have a significant impact on what we trade. So I wouldn't pay too much particular attention to these unless you are trading these individually through equities by buying shares of the company or through options, okay? And looking into next week's calendar, we can see Monday is a pretty light day, only 4 reports prior pre-market and only 4 after close. Gets a little bit busier Tuesday with 14 in the pre-market, 11 after hours. Wednesday midweek, 14 pre-market, 22 in the after hours. Thursday it starts getting busier near the end of the week with 28 in the pre-market and 14. And then you can go in those individual days and then you can start to look at who is reporting in the pre-market, who is reporting in the after hours. Again, make note of those bigger names that you're familiar with and the ones that will actually impact the exchange, or sorry, the index that you are trading, okay? And then we wrap up the month of August, and then we're moving into September. And September is going to be a busy month. It's coming back from the summer holidays. We move into September, Labor Day weekend, and then kids are back to school. Markets are picking up. We do have the first Friday of September will be NFP on the September 5th, and then we do have FOMC. I believe it's over here September 16 or 17, if I haven't double checked, but I believe it's the 3rd week of September, okay? And that's the one that we're hoping that there could be a rate cut coming to help the markets, okay? And Discord, guys, we sent out a signal yesterday, long on gold just after 8 a.m. After that big drop right over here, we were looking for buys above 3,331 and got that big move for 100 pips right over here, okay? So we'll keep an eye if we get any signals today. And also, we do have the free Telegram channel pinned at the top of YouTube for you guys. Thanks everyone for joining on YouTube. I know there's not a lot of you guys. It is early in the morning and more will be coming later, but we say here, the early bird gets the worm. So thanks guys for getting up early with me here and go through the news. So this Telegram gives us a couple free signals, everything that we do at SST, promotions, giveaways, the free blog available. The last one we did was what are our dividends. So get familiar with some dividends and you can learn what those are. Also guys, if you want to join the team, here's our website, stocksnipertrading.com. We have a lot of education with myself and Dave. We're going to pick up more on the education come September because everyone's going back to school. So we're going to go back to school as well here at SST, and we're going to learn, polish up on some concepts and learn some new things regarding we're going to get more into stock and option analysis and learn a little bit about that financial aspect of trading. Okay guys, and sorry, I forgot one link today, our Yahoo Finance, just to go over today's top news. Let's see what's going on. In Canada here, a number of Canadians getting EI, unemployment insurance. So remember, every Thursday morning at 8:30, US releases their week-over-week unemployment claims. So here in Canada also, Canada is getting EI claims up even as unemployment holds steady. Okay, so regular EI beneficiaries rose to 541,000 in June, up 11% since the start of 2025. And almost 13% from a year ago. So you can see those are big numbers. Those are double-digit numbers here in Canada. US, not as much, but unemployment is getting high over here in Canada, okay? Ontario sheds manufacturing jobs as tariff impacts felt. So you can see tariffs impact everybody around the world globally, and manufacturing takes hits, services will take hits, and you can see it can cost people their jobs, okay? So tariffs are Not necessarily the best thing in the markets, but it is a tactic that is used. Apple TV Plus streaming service to cost $2 more a month per in Canada here. Carney and Trump are back to talking again, so that's good. Hopefully they can come up with some sort of agreement and both be happy and continue trade, because this is getting out of control to continue to delay this. So hopefully Carney and Trump will come to their senses, sit down at a table and discuss good trade that benefits both countries, okay? Hopefully we can get through that. What else do we have going on in the news? Nike eyes China growth with outdoor sports revamp at the center. So not much, but Powell with the White House watching Fed's Powell to hint yes or no on rate cuts. Okay, so that's why today's a big day regarding the Jackson Hole day 2 and Powell is speaking in his speech today. So look at, even the White House will be watching and listening closely if Powell will hint a yes to rate cuts coming September, or maybe he'll hint that he's not considering it. So it will affect the markets, guys. So let's pay attention as well at 10 a.m. Eastern. And if you're done trading at that time, it's also good to pay attention to this over the weekend so you can prepare yourself for trading next week, okay? So that's what's going on in the news right now. It looks like the markets are green in the US futures right now, with the E-mini S&P up almost 0.25%. Mini Dow is up 0.3%, and we got NASDAQ 0.15. It's still early in the day. You know, right now it's pre-New York trading at 6 a.m. Eastern, so these markets are just opening up. And some of us are still in bed right now, and we'll be getting up very, very soon, okay? So that will be in the news today. And guys on YouTube, thank you guys. If you guys wouldn't mind liking the stream, subscribe to the channel if you haven't already. Let's see if we can hit 82,750 today, if we can grab 30 new subscribers in today's session, okay? And we'll get started with gold. We'll do a top-down analysis. We'll take our time. It is early, so we don't need to rush these things. Today is a good morning to learn a little bit with myself. So, and also, if you have any questions, feel free to ask some questions, okay? We're going to go on the daily, then bring it down to the 4 hours, see what's going on in the 4 hour. We'll bring it down to the hourly, and then I'm going to stop at the 15-minute time frame. And we'll watch 15-minute time candles, okay? So it gives us a lot of time to watch and see where the 15-minute candles will close. So we'll see 4 of those per hour until we get into our exchange opens and more of the high impact folders. Then we can bring it down to the 5 minutes if you like, or we can stay with the 15s, okay? I just want to show you something different. You guys know what we do on the 5 minutes. For some of you guys that have been here for since we started, you guys probably know what we can do on the 1 minutes, but we haven't really focused on the 15 minutes, but I'd like to do that today, okay? And some of you guys do trade the 15-minute candles, so then it's right up your alley, okay? And so let's get started, guys. Good morning to everyone on Zoom. Thanks, guys, for joining. I know it's early and there's only a few of you guys, but welcome, Samuel. DCY, good morning. iPad is Mohammed, good morning. Denny, good morning to yourself as well. And YouTube, guys, Pablo, thank you for joining. Libelli Trading, thank you for joining. Shivan, welcome. Disciplined Trader, thank you. Hopefully we can be disciplined today on a Friday. We can strive for that, okay? So gold, guys, has been making a few moves. We had some attacks yesterday all around the world. You know, it doesn't stop. In the Middle East, in the Gaza Strip, still intense bombing going on down there. Ukraine and Russia, I don't see a peace or ceasefire happening anytime soon. So I don't know what happened with that meeting with Trump, Putin, and Zelensky. It looks like they're still at war over there. So nothing has really calmed down. So when we're trading gold, you know, gold is a hedge for anytime there's tension around the world, war, pandemics, inflation, anything, uncertainty around the world. A lot of investors park their money in gold and hold gold as a store of value. when there is uncertain times, and I don't see anything cooling off in the near future, so that could cause more demand for gold. But right now we are on a little bit of a downtrend, starting like from August 8th, Friday. 2 weeks ago, started to push down. Right here was a lower high, moved a lower low, came back up, lower high, new lower low, and slowly came back up to this lower high. And we're going to see today, is it going to push through here for that new lower low, or is it going to maintain here and come back up to maybe 3,350 and maybe make our way and push for a new high up here, okay? So that's what we got to be watching for. And just some critical areas, points of interest to look at on the daily, okay? So I'm going to take my time with this. I'm going to go a little slower so that everyone can really learn here, because I do this kind of fast as some days, and some of you guys are always asking questions. So this is a day where if you have a question, please ask, and hopefully I can answer it if I see your question, okay? So we all know that this wick right here is the all-time high of gold, and it hit it on Tuesday, April 22, and you can see also these psychological numbers, okay? So when you're trading, also when you're looking at structure of the market, you're looking at your support areas, you're looking at resistance areas. Also pay attention to psychological numbers in the markets, okay? It is a live auction. Markets are a live auction, and they do like to transact at these nice psychological numbers for efficiency in trade. There's more trades that can happen quicker at these nice whole psychological numbers. And these numbers are just your everyday household psychological numbers, like 3,500. If it goes all-time high to 3,600, 3,700, 3,800, 3,900, 4,000. Those are your nice whole numbers. But you can also look at like your increments. The markets like to use increments of 25. So 25, 50, 75, 100. If we continue to go up, 125, 150, 175, 200. See, when we're talking about interest rate basis points, like right now, the US is looking for a quarter basis point, 25 points, as a 25 points, 50 points, 75. So you can see how the markets tend to run on that. And it depends on what time frame trader you are. If you're a scalper, for example, 1 to 5 minutes, you're looking for like a scalp for approximately like 25 pips is a really good scalp. When you're starting to look for 50 to 75 to 100, it's not that easy to do that on the 5-minute candles, because the volume wise doesn't always give you a 5-minute candle worth 100 points, okay? But 25 points is reasonable. If you were looking for like 50 points, 100 points, 75 points, you got to go slowly up the time frame. Then more like a 15-minute trader, a 30-minute trader, a 1-hour trader, they could have 50 pip goals, or 75 or 100. If you're looking for those big ones like 300, 400 to 500, you would have to take a lot of scalps throughout the day to achieve that quota, or you could do some swing trading. Swing trade the 4 hours, the daily candles, like right here. You can see that we're on the daily analysis. Like this second top up here where it came in there, the double top, and then it retested in there. Like if I was looking to short this on a daily time frame, I'm watching these daily candles as if they were 5-minute candles. Maybe I take my sell right there, I place my swing stop loss up here, and I'm looking to break down, maybe to come down, take out this structure right there like it did. And you can see the move is not 25, 50, or 75 pips. Like if you, just that one daily candle alone is 700 pips, okay? So you can see that it starts to get really big. There's 1,000, it really starts to move down, okay? But just pick your time frame that you're comfortable with, okay? Not everyone wants to be a scalper. I understand that. It's fast, it's furious. And also, not everyone wants to be a swing trader or in the markets, but you can utilize both, right? I do all of them. I love to scalp the markets, but then I take my profit and then I invest it in the market on the higher time frames so that it can also get me a good return while I'm making money intraday or scalping the markets, okay? So any questions on that? First thing, before we continue, is there any questions on, do you guys understand like the psychological numbers of trading? Okay, and it works for all securities. It's not just for gold. It's not just for US30. It's not just for NASDAQ. You can do it in currency with GBP USD, Euro USD. You can do it with anything. Like even Tesla, for example, it has psychological numbers. If it's trading at $250, maybe the next strike price that you're looking at, depending on what time frame trader you are $5 increments, maybe $25 increments to 275 to 300, things like that. Okay, so that can help you along the way. When we figure out, well, what I do is when I figure out one piece of the puzzle, I try and look at the opposite piece of the puzzle. So when I figured out the all-time high wick, which is pretty visual here, it's not like a secret where it is, I look for the most recent low or the lowest low off of that all-time high. So we can see when it hit the all-time high, the market dropped right there, and then it came right back up. So we can see now our entire range from the all-time high to this low point, and we can also see the dates. May 15th, gold dropped down to 3,120. So we are in this range, and you can see the body of volume. Like if I was just to get my Fibonacci tool from this orange line to this orange line, it will tell us exactly, like, are we near the middle of this entire range? Are we near the highest point? Or are we near the lowest point? You can see right there, there's the 0.5. So the 0.5 is exactly 50% of this entire range. And you can see how on the daily, like even this last 2 weeks, look at where gold is consolidating. We're just consolidating right in the middle of this entire range, right? We're not near the lowest point, near the support, and we're not near the highest point where it's resistance. We're right in the middle. So this could move back up. Right now you can see that the buyers are accumulating. Every time it comes down, it goes back up. It comes down, it goes back up. It could come back down and it could go back up. But we don't have any closing bullish volume above here. It impulsively broke out, came back down. Impulsively broke up, came back down. Okay. We could get multiple days in here. You can see how long have we been consolidating in here? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9. Almost today, like on Monday will be the 10th day in here. So that's 10 days, 2 weeks of consolidating, and we're not really moving anywhere. Okay. So buyers are accumulating, but at the top of us, we also have sellers accumulating. Every time it comes up, it goes back down. Comes up, goes back down. Comes up, it's going back down right now. So we've got, you can see that sellers are also in the market and they are accumulating as well. Okay, so maybe they'll push it down, probably, hopefully maybe close it down there. Maybe it will come for a retest here. This turns from support to resistance, and maybe it can drive to take out those lows, maybe drive down for a new low. Okay, so when will this happen? I don't know. It all depends on who accumulates more here. So you can see both sides are accumulating, but one side will win once all of this accumulation is redistributed. We could also get another few days of trading inside this zone. Again, continue to accumulate in here, okay? So that's how volume works. Volume is not a secret. It just has 3 basic directions. It'll just continue to accumulate in a zone, or it will redistribute to the upside or to the downside. Very simple. This is what we call the SST sniper trap and gap, okay? It's a very basic strategy of trading. It's not very difficult, but what you do have to watch for is once it does start to redistribute, it doesn't always just close and retest, okay? That is one option, but you could also see it could impulsively break and then come back down and close inside. Then we got like a false breakout. Also, if we do get a body closing above, when it comes down for the retest, we're looking for a retest point here. We're looking for a wick here. But what if that body that's coming down is like a fake out candle and it's very strong bearish, and then it's right back inside the zone? Then it looks like it did close above, but it got faked out and came back in. So you got to know that there's also fake outs in the market as well. And the way how to follow those is try to the best of your ability to wait for bodies to close. Try to the best of your ability to look for those proper retests at critical points. You know, 50% of it, of a base of a candle, or at this area where you see its resistance. If volume closes above, then it will flip to support momentarily, and we see if it holds. If it doesn't, then we know it's a failed breakout. And those are normal in trading, okay? So some of you guys are well aware of this. Sometimes you guys get faked out of trades, just like me. I get faked out of trades, but that's how trading works, okay? So we have to be more careful when we're trading, okay, at all times, because the market tries to fake us out. That's how it gets our money from us. If it was just very standard and basic the way how trading works, everyone here would be making money, and and then all of us wouldn't be losing anything, which is hard to say these days because markets are not easy to trade, okay? So we do have a range. We can find now some supporting areas that have multiple touches at areas, and we can see results. So what I look for is I can see that when we hit this all-time high, we had a big rejection and a bearish body candle that kind of closed relative to 50% of that bullish candle that came right back up there, okay? So you can see right there, that's when I started that red zone right off of those two candles. But the secret sauce is stretching it into the future. When I learned this concept, it was a game changer for myself, you know, because if you don't stretch it in the future, when it does come up, you don't know what it's trading into. It's just coming up. When you can visually see what it's trading into, then it might give you a different perspective. So when it traded right back in here, look how strong the close was. Okay, so these are those candles that you gotta pay attention to. These are those ones that, you know, when we say when they give you a clue, these could be those ones, and these can be on all time frames. This could be a 1 minute candle. This could be a 5 minute candle, a 15 minute candle, 30 minute candle, a 1 hour, a 4 hour, but this is a daily candle, okay? So look at it. It opened, had just a small pullback, very bullish. The previous day had a low wick closing near the high, so it popped it. That's what we call that firecracker. It's when you light a firecracker with a small wick, it explodes, right? And that's what you have here. You have that explosion, and that big bullish candle starts to fill everything to the left of it, continues to come up. This is a Tuesday, mind you, and it closed, there's the high, and it closed with all of that volume. So it closed with bullish volume, I would say like almost 99, 98% right at the highest point of the candle. So logic tells me that it wants to continue with the momentum when it opens bullish and just continue to drive with that volume, okay? But this is where you see a clue in the market, right? It's got that small wick. This, when it opened, I would assume, see how it closed above? Then what I do is, this is as soon as it closed above this red zone, I flip the zone green, okay? So guys, pay attention to this because this is how you can learn here. Right over here, I flip it green. Then I'm looking for the pullback to possibly buy this thing because it did close above. But first indication was when it opened, I would assume it would open bullish, ignited, ready to just move up with all of that momentum, closing right near the high. You can see that that did not happen, okay? Because if it opened bullish, ignited, it would have just had to drive up maybe a couple pips and pop that. Then we would be filling our all-time high wick right behind us right over here. But this is kind of a clue. It opened bearish, ignited, and the days also, the pieces of the puzzle, Tuesday and then a midweek reversal. So there's your bearish ignited candle, and when it's coming down, I'm looking for a retest of the green zone. Do I see a wick there to come back up? No. I'm looking at around 50% of this green zone as it was coming down. Do I see a wick right there on this candle to come back up and maybe start the buy? No. It keeps coming down below 50%. Then it keeps coming all the way down where eventually it closes about 95% right to the lowest point. So it's a bearish candle. It's not bearish engulfing. It didn't engulf the entire candle previous to us, but it did engulf about 3/4 of it. About 75% of it is engulfed, and it closed below that zone again. Okay, so then with that candle, then I go back to making it a red zone. It looks like it was a false breakout above there for the buyers. And then now you see the next day it opens bullish. So this was a bullish candle, but look, now it's trading in the red zone. So it comes up bullish, bullish. This is a big blue candle, testing about right there, 50% of that red zone. It goes a little bit higher right there. It's still lower than this. Then the sellers you see are in the red zone, and they start absorbing all of those buyers, start offering for them. And you see it push down, it gets rejected. That's the resistance, getting pushed down, pushed down, pushed down. And then right there, when it breaks that low wick, you have the transition of the candle turn from a bullish candle into a bearish candle. And then it starts to push down and take out that low and drop for a new lower low and close with bearish volume. And then when that happens, see, that's why this zone is really important to stretch it into the future. If we ever do come back into this zone, we're going to see if it's going to hold as a red zone. So if I continue stretching it into the future, you see we came very close right there, but then it went right back down. We start to trade right back in the zone over here in early June. Okay, June 2nd, June 3rd, June 4th, June 5th. Okay, you see it comes in there, goes back down, comes in there, back down, comes in there, back down, and it starts that next leg back down. Again, we come over here again. Here's a very similar example. On a Friday now, so Friday, today is a Friday, so we got to watch how these candles close on a Friday going into the weekend and how they open on Monday. See this big bullish candle, went to the high, closed, okay? So I start with, again, when it closes above, start with a green zone. And I look when it opens. So this one, in fact, opened bullish ignited and started to fill the previous wick, but just popped just a little bit. So those are those ones that can, get you in the trade. But sometimes you got to hold off. You got to be careful. You got to have intuition to take it. Again, look at the highest point of that candle, 3,450, that nice psychological number, what we were talking about. And then you see it comes down, it gets rejected. When it comes back down to the green box, I look for a wick there to come back up. It's not there. I look for 50% of the green box. It's not there. It continues to come all the way down and close near the lowest point. It's still in a green zone, but then the next day, you see, we open, we come back up, go back down, closes inside. Come back up, we're below 50% of that bearish candle, then it starts to close below, and then the zone turns red again. And you see it's a false breakout again. And if we stretch this into the future, it goes down, it picks up more buyers, and it does the same thing again there, a Tuesday, and a fake Wednesday, fake out, and then they bring it right back down, and we continue pushing down. Again, we trade in here. Just, you can see last couple of weeks, a Thursday and a Friday. There's the Friday trading inside about 50%, and again, they close it below and push it down. Now I stretch it into the future, and this is where we're trading today. You see off of that, we're making those lower lows, came back up, lower high, new lower low, came back up, lower high, and now we're trading right at 50% of Wednesday's body right in here. Are they going to continue to push this down, or are we going to reverse back up and test about 3,350 and maybe higher? Okay, so I really zoomed into that so you guys can see. This is that red box that I've been using all the way since April 22. So does that help, guys, to understand that, yes, we do have candles that close above, but there's fake outs that happen in the market. There's candles that close above, but there's fake outs that happen. There's candles that close above, but then there's fake outs that happen. Also recognize the days. It's not always going to be a Tuesday, Wednesday reversal or a Friday, Monday reversal, but it's good to know that, okay? So just when you're trading on a Tuesday, going into a Wednesday, and you see that, maybe just think twice. Just say, oh, remember that call where Ron said, just be careful on a Tuesday, Wednesday possible reversal or Friday, Monday reversal. Someone asked me, well, Ron, is there Tuesday where it will close and a Wednesday continuation? Absolutely. I've seen that too. But I'm just showing you this chart on gold here, and you can see a lot of it is those Tuesday, Wednesday, Friday, Monday reversals. So again, that's why it's important if you're holding positions overnight on those days, or especially on a Friday like today, if you're holding gold over the weekend, we don't know what will happen on Saturday and Sunday around the world. We don't know if a missile will drop or if war will start again, and or peace talks, and then it opens on Monday opposite direction. So if you are in a trade over the weekend, you know, you don't have control over what happens, but you got to be prepared with your risk in case something happens. Okay, so how come discipline trader, how come the values are different from GC? Because GC is trading in the futures. Okay, this is not futures. This is more forex. So this is different. But I guarantee you, if you look at GC, the same daily candles, you'll see the same candles. It just has different numbers because it's trading in the futures. It's got different liquidity levels. Okay, so that's the only difference. But it's probably the same structure of candlesticks. Like if you look on your charts on Friday, August the 1st, that was NFP. You can see where we opened on gold. It was 3,290. Your opening price in the futures on Friday was probably a different level, probably over 3,300. And then you can see where we closed here was 3,363. Might be a different closing number, but I guarantee you, you have a big bullish candle like this on your chart, just different values, okay? Just look for patterns, follow the candlesticks. Okay, and then when I find a red box, can I find a complementing green box? The green box that prior to even figuring out that red box was when we were coming up with this bullish move, you know, when we had this flag right here, I identified that flag on those 3 days as it was happening. You can go back and watch our live videos on Friday, April 11, and Monday, April 14 and 15th. I guarantee you on those videos, I had this area consolidated and I had it stretched in the future because that's my strategy. That's how I trade. So that is a technical bullish flag. You have this 3 days, big, massive. You have the second day closing above the structure. Then it kind of cools off. So that's a bull flag. Some of you guys are very familiar with this pattern. It's one of the basic patterns to learn when you're starting off trading, bullish and bearish patterns. Flags, and it's got a high probability it will continue to the upside. Why? Because it's got a big rally and then it kind of catches its breath and then it continues going where it's got to go. Does it always happen like this? No. I've seen bullish flags that are fake outs that come up like this and then they get a wick and they get rejected and they close back below and then they start dropping. So again, you just gotta understand nothing is guaranteed in trading. Even when you spot your A++ setup and you want to bet your entire farm on it, it could go against you. So I know that trading is all about probabilities. It's not about guarantees, okay? So what I do now is when I identify whether it's consolidation or bullish flag or bearish flag, I color code it. So this to me was a bullish flag. I make it green. And then I stretch it into the future. So off of the all-time high, did I know it was going to come all the way back down into here? No, I didn't know that. I don't think anybody knows that. But when you draw the zones and you anticipate it coming in, then you can trade it with a little bit more conviction and trade it with a little bit more confidence. So that's the technical side of trading. And we did push down in here. You can see it slowly came down, and then we can now see the actual results, what happened when it transacted in here. That's all about like back testing. This is all about doing some review on the weekend. So I'm helping you guys like kind of back test, get you guys understanding what to look for. So when you're back testing, then you see, oh, it came right into my zone where I had a bullish flag. I see it came in there, it broke down, but the candle did not close down there. Remember, the candle has a closing time. This one is a daily candle, so you gotta wait a long time for it to close. But when it did come down there, it came down there, and the buyers were right there in that green zone, and they closed it. Look at where it closed. It closed right at the green zone. And again, the next day it came up right into about 50% there. There's a wick and a wick. That wick is a support. It turned to resistance. They pushed it back down, came in the green zone, higher low, and look at where it closed. Right at the green box. Then that was a Friday. And then here's over the weekend. Here's your nice bullish news coming in the market and took gold right up to the second top double top. There's an M pattern. Okay, so when you start to recognize patterns, there's one top in the red box. It came back down. There's the neckline at the supporting area. It came back up. There's the second top, and there's your second drop. It did break, but then it came right back up to a third top and then pushed back down. Didn't create new lows, and then it came back up. There's a fourth top, and then it came back down. Didn't create new lows. It's got higher lows. Then it came back in here, a fifth top. And this is the leg we have coming down right now today. So you can see, guys, how that red zone is still maintaining selling pressure, still protecting the all-time high. This move right here was the most recent high that it got up to. So that could be a daily point of interest. 3,450 psychological number. It came in there and it pushed down. This yellow line is lower than the all-time high. So all of this wick still has yet to be filled. And you can see that the market from this yellow line right over here is a lower high, and they pushed it back down. It came back in here, 50% of the red zone. I would look at 50% of this entire red zone right there. That's about 50% of it, from half of the red zone. And you can see how these psychological areas play in here. See where it came in, closed, came a little in there, came back down, closed right below that yellow line, came right at the yellow line and dropped. And notice the number, guys, 3,400, 3,450, 3,500. If we make a new all-time high, I'm going to predict it's going to go to 3,550, right? So I can already anticipate if we ever go to a new all-time high, I'm going to put a yellow line at 3,550 right there. My next one, if it continues, 3,600, right? And I just continue to do that depending on what time frame I'm trading on. But that's how you can utilize technical analysis with psychological numbers, finding your daily points of interest. Okay. So with this green zone, again, stretch it into the future. Then someone's going to say to me, well, Ron, what happened with your green box theory right over here where that selling candle closed below? I'm going to say, well, that happens. You know, it's not always a guaranteed green box that you just blindly buy when it comes, or you just sell in a red zone. You got to watch what happens there. So this one did close below. When on that day, May 14, I would have made it red. Next bar opens, bearish ignited. So it didn't even come up to retest. It opened bearish, just took out the wick and dropped. And when it came into there, it went right back up, but look at where it closed. At the end of the day, it closed at the top of the green zone again. So it's still technically a green box. Next day, again, when I'm looking for a retest, did it come just 50% here and go back up? Maybe I would have looked for a buy. It came all the way back down there. It did not take out the low, so that technically is a higher low, and it closed below the green box. So that's again when I flip it red. But then I noticed that it opened bullish ignited and it came all the way up. When it's coming into 50% of the red zone, I'm looking for it to get rejected and come back down to take that sell with the sellers. But the buyers are strong. They push it all the way up there and then they close it again in the red in this zone. And then it comes back down, picks up a higher low and starts to break out, and there's your closing bar above, and that's where we get that next move coming back up. So that zone technically is still green. It get violated right over here, but the buyers recovered it. Higher low, ignited, open, higher low, body, volume closing above. It took a few days of barcoding where it was bearish, bullish, but it looks to me that buyers won that battle right over there. And this zone now is still stretched into the future, and I can see we have not transacted back in this zone since that time, and it's been a long time. It's been, last candle that traded in here was May 20th. So we have June, all of June, we have all of July, pretty much all of August. It's been 3 months since we've visited this zone again. We came very, 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 very close to coming into it on these days right here. On this day, May 29, it dropped. That was a bearish candle, stopped right there. Okay, caught its wick, that was the lowest point, and went back up. Notice how it did not transact in the green zone. 1 month later, end of June, we came all the way, sellers, right there again, right to that yellow line. Exact. That's what we call tweezer bottom lows. I will even write on these things, maybe so we can understand, and maybe you can look at these things. So what we can do is we can go to settings maybe. We can add a text to it. These are called tweezer bottom. Hopefully I can spell right today. Tweezer bottom lows. These are what are called, in quotation, equal lows. Okay? If you don't know what these are, I suggest you learn what these things are because it may help you out over here to know what to look for on all time frames. So tweezer bottom lows, equal lows. You see how it's an equal low. You can look at the price tag. 3,245 and 82 cents is equal. It didn't break because if it just broke even 10 pips, it will create a lower low wick, and that could change the entire structure of what we built above us. Possibly get more sellers in the market now, get hungry to continue to sell when you make new lows. This, when it's equal lows, changes the algorithm below us, maybe gets more buyers pending at these locations, building up because they see it's equal lows and now they want to, maybe they're predicting that the market is going to go up, so they're getting more stronger in the depth of market. But you can see that it held at those equal bottom lows, okay? So now what we got to do is continue to find some critical points of interest. Not just wicks, you can look at bodies too. So even over here, this area, right here, where it came down, now I can see it came down, back up. Big bearish candle, broke down impulsively, and look at where it closed. Yellow line. Next day it opened, it was bearish where it came down to that equal low and went right back to the opening price and closed above. So you see there's a body close, a body open. Again, like a month later, it comes back down. Look at where it closes, relative right to that yellow line. Next day again, retests that and goes back up. So you see this yellow line is holding now support with the volume. And it's close to that psychological number, 3,273. It's off by 20 pips. 3,275. Okay. Again, now I can see this next pullback. Is there support here? There is. Okay. We can see it bounced. It pivoted right here in the market. Okay. Right over here. That was a bearish candle. Close. It went down just a little bit back to the opening price, and we had this big bullish. This was this Wednesday. So we're retracing back down. Are we going to come back down here? Is it going to come back down to 3,315? Is this going to be like a double bottom? Is it going to hold? Is it going to be a lower low down in here? But so far we're still holding good support. So you can see this is called a higher low. This is a higher low. These equal bottoms are a higher low, and we're still above our green demand zone. Okay, so you see how the market is continuing to go ascend. We call it ascending, where the market is continuing to go up with higher lows. The market is ascending. If you were to draw like a trend line, you can visually see how it's ascending. Where you want to draw your trend line, that's all up to you. Some traders will draw their trend line like this, you know, from maybe where the bodies of the candles are. You can draw a trend line like that. You can see when it started at these bodies, did it come down? Still above there. It hit that trend line right there and that point of interest. Continue to go up. Are we going to come back down to the trend line? Like if we break this yellow line, maybe the trend line is going to get hit and go back up. Or if sellers close it below the trend line, that could signal a reversal and coming back down. Okay. Some traders will identify wicks. Okay. From that wick, from that lowest point, then maybe connect it like that. You can see that that's also an ascending trend line. Starting from the lowest point right here, the trend came back down right there. The yellow line got our trend line, continue to go back up. Again, it came right back down close to the trend line, and you still see the volume is still trading above the trend line. So we are in a bullish ascending motion. But this is our flat resistance top. This is what we cannot break out of. So it might continue to accumulate for a few more weeks like this. Maybe get that, do something like this, finally get that breakout, you know, then come back down to retest this. At this point, maybe we make it green, maybe get a retest there, then we're breaking out new all-time high. Okay, but we gotta, you know, continue to build off the bottom and trade through this red zone and break through it, you know. So that's a possibility. If war intensifies around the world, tariffs, inflation, unemployment, all of these things, a lot of investors might look at gold as a hedge or to park their money in the meantime while there's a lot of uncertainty. Okay. However, if everything opposite happens, if there's a lot of jobs, Trump, he's maybe talking about taking tariffs off. That would be positive. Then that would maybe see some selling on gold. If inflation is going down, let's say that hope to God that there's some peace agreements or ceasefires around the world and stop innocent killing of civilians, that would be perfect for the entire world. But investors will start to sell gold, and that could trigger the sell-off because they're looking to now take their money and put it somewhere else in the markets. Okay, so you can see we're still trending up. If you want to keep the trend line, you can keep the trend line. What I do is I color coordinate. So if I'm placing this trend line on the daily, I'm going to keep the trend line as a yellow line. Okay, to keep everything in sync. Okay, so I know then if my hourly volume comes down to this yellow trend line, I know it's a daily trend line. If my 5-minute volume comes down to this trend line, I know it's a daily trend line. I place more weight on my daily points of interest than I do on my hourly, than I do on my 15-minute points of interest. Okay, why? Because it holds more weight. Obviously, the higher the time frame holds more weight. Okay, so that's what we got going on so far. I know it's more of an in-depth analysis today. That's why we started a little early, because so to get you guys knowing what we do here, so you guys kind of have a good indication of what's going on when the markets move faster in Wall Street or COMEX. Then you guys know what I'm looking for, like on the 5 minutes and things like that. Okay, now. We got to deal with all of this stuff going on the last 2 weeks. This big bearish candle, again, if we're to identify, again, just look for your 50%. And this is a big bearish engulfing candle. So I'm not just choosing this candle just because. I'm choosing this candle because the way how it closed. Okay, you can see it was bearish where it traded in this 50% zone, and it came it's not like this candle that just came down and went back up and closed as a spin top. This, you can see, was engulfing. It completely engulfed like everything almost to the left and closed right down in there. So that's a good candle. I'd like to find that point of interest, that point of control of 50%, and it's right there. Okay, so now I can see when we're kind of back testing, we can see Wednesday, August 13, we came right there at 50%. And what were the results? The sellers were there and they pushed it right back down. But it did close with a little bit of blue volume. Next day again, it opened bullish. It was filling. It got a higher high above that day and then just came up there. But remember, we still have this red zone above us, the bigger red zone. And sellers rejected it back down and closed it below. So we came back up and look, that's a lower high. Right here, this is a point of interest as well. We got a body and a wick right here. So let's place maybe a yellow line right here. Not a red line, sorry. I hit the wrong button, my fault guys. I said a yellow line. Everyone following so far? I'm trying to go a little slower than I normally do so you guys can understand what I'm doing here. And you can see now this yellow line is resistance. This yellow line is resistance. This yellow line is resistance, but it's right at 50% of that red zone. And then they pushed it right back down. So you see we're holding support now right here and at our trend line. Then this Wednesday we had that nice big bullish engulfing candle. So that's a good bullish engulfing candle. Can I figure out where 50% of Wednesday's bullish candle is? Very easy. Grab your Fibonacci tool from the opening price to the closing price. 50% is right there. We are trading right at 50% as I am speaking right now. Okay. So now let's just briefly go over how yesterday traded. Yesterday opened bullish, came up, lower. That was yesterday's high. It is lower than this high. We're below this red yellow line. It was lower than this. So lower highs. You can even draw a trend line coming from up here. And you can see how it's descending. We're in that symmetrical triangle where it's going down, descending, and it's ascending at the same time. That's a symmetrical triangle. It's not an ascending triangle. It's not a descending triangle. It's symmetrical. And symmetrical can go either way because sellers are selling the top and buyers are buying the bottom. Again, whoever accumulates more, it's kind of like in a consolidated zone as well. but it's just in a trend consolidating. And when we came up yesterday, got rejected, came back down and closed right there. Today, where did we open and where did we close? Now we can see it. Yesterday's body closed right there and we opened right here, 3,338. When we opened, we were initially bullish, just a little bit. Like you can see, I placed now a purple line from my highest point of the day that I'm concentrating on today's daily candle. 3,340 is today's high. I see it's still below 50% of just the bearish volume that it closed yesterday. So sellers are still technically in control from the previous day's volume, and it pushed down to the opening price. You see sellers were bearish. This was a big black candle coming all the way down. Now let's look at today's low. What do we see? You guys tell me. What do you see at today's low? What do you guys see? I know you see a purple line, but what is it? Anyone want to answer it? What is it called? Or what do you think it's called? It's called support, yes. Equal bottom low. Do you see why? Yeah, it looks like a technical tweezer bottom low. Just like the yellow ones we identified. Where was it? Down here. Just like these ones. That was a wick and a wick. Equal bottom lows, tweezer bottom lows. So we've got one now forming on the daily again. So this could give us a clue today that the market has stopped right here. That is today's lowest point, but it is also, what we can place here is, it's our low of the day. Whoops. Low of the day. And we can call them tweezer bottom lows, tweezer bottom, or equal low, equal lows so far. Okay, well, we just got to make note of it. Okay, so there it is. So when it came down here, it came down. The buyers stepped in exactly at yesterday's lowest point. It didn't allow it to break a little further. So the buyers now are protecting this zone, and they're there and they're pushing it right back up to this yellow line, which we got from previous days over here, at 3,300. So we got to see if they can flip this body and come back up to the opening position and maybe come to the high and flip the candle. Then we have a daily candle flipping like a hammer, bullish pin bar candle turning into a hammer and going back up. Okay, but right now the sellers are still there. They could come all the way right back down to this lowest point and break it during COMEX, during Wall Street, during when Powell is speaking. Okay, but right now they're maintaining it, they're holding it. So let's take that clue for today as we move into COMEX and Wall Street market open, into when Powell is speaking, and maybe could give us an indication that maybe it's holding to continue to move back up. But we still have this bearish volume left in the candle that could definitely come right back down. Okay, it's not a guarantee just because we spotted that. Now what we got to do is, that's pretty good analysis on the daily. Now let's move to a different time frame. So what we do now is dissect this daily candle, and you can go either into the 4 hour or the 1 hour, whatever you choose. If we come to the 4 hour, this is what we got going on the 4 hour. It came down, lower low, came back up, lower high. Came back down, new lower low, and stopped right down there. That was Tuesday, it stopped. It came back up Wednesday. We had that big bullish day on Wednesday. Kind of a midweek kind of reversal coming back up. But you see, it hasn't made any new highs. It's still, this is a lower high from there, lower high. Sellers were there. They pushed it all the way back down. See, this day, Thursday at 6 a.m., that was where it came all the way down. It hit that purple line, came right back up. You can see right now, the last 4 hour candle, we came exactly right down there. That was coming from Europe, 2 to 6 a.m. We came down and it stopped right there. There's our equal lows on the 4 hours. It came back up, but we got a lower high, lower high, lower high, lower high, lower high, lower high. So you still see that there's still selling pressure, even though that we're still holding here. It closed, that 4 hour candle closed as a spin top, virtually exactly where it opened for 4 hours. 4 hours of trading volume. It opened, it was bullish, and then it came back down to those equal bottom lows, and then it came back up, and look at where it closed, exactly where it opened. Okay, so now we opened on this 4-hour candle with 3 more hours to go. It just came down, higher low, came back up right there, and it's holding this volume. It's not going to still trade in here. It's going to eventually try to make a move to fill this wick, maybe get up here to 335, 336. That's about 50 points from where we're at, or sellers are going to step in and come back down here and try and push it down to attack these tweezer bottom lows. Okay, so right now we've got it coming down on the 4 hours, like a 4-hour trend pushing down, but we still are building. It's still hard to say right now. What if I'm looking for maybe like a pattern? Maybe on the 4 hours I see like a left shoulder, I see a head that came down, came right back up into that shoulder right here. That's where technically we should have maybe looked at that inverted head and shoulder and looked for that bullish breakout. But you see it failed with all of those wicks. So now it's coming back down into here. So maybe it will be like a higher low, shoulder coming back up. But it could definitely just continue to break down. Like if 4-hour hourly volume gets below those tweezer bottom lows, breaks, we could be breaking. There's our trend line. There's that point of interest. Then that's where gold will dump down there. Okay, but that's what we got to watch for today. Okay, so we're not getting much on the 4 hours. We go into the 1 hour. Now we can start to see the 1 hour. Okay, you can see that it's kind of consolidating the last few hours. There's a big day with Powell speaking at 10 a.m. Day 2 of that Jackson Hole conference. So you can see now we can follow the volume. It was been coming down since the futures market opened up. Here's midnight, 1 a.m., 2 a.m. This is pre-London. Here's London. 3 a.m. came up bullish, but then went right back down, closed inside here. So we're kind of barcoding bullish, bearish, bullish. Well, one of these hourly candles, you see it broke out of here impulsively, came back down, just broke up a little bit, came closed back down, came back up, closed back down. So are we going to get an hourly body physically close above this yellow line? Maybe it will turn from resistance to support going forward, and then maybe we can fill London's high wick, maybe start to travel up to the opening price to 3,338, and then that's our highest point today. Or it's just going to be a lower high, and we're going to come back down for one more leg. But you can see the hourly, when it comes down near that purple line, it goes back up. Comes down again next hour to that purple line, goes back up. Came down again to that purple line and going back up. So it is got a little bit of hourly support at the lowest point of the day so far, but it doesn't have enough volume to continue to break out right now. We could consider this to be like the second bottom accumulating. If you consider this as one bottom right there, it came back up. All of this purple line area is kind of the neckline, the highest point of the day, and then you see it came back down. All of this, those 3 wicks, 1, 2, 3, you can consider that all as like one bottom. So there's the second bottom, and traditionally a second bottom can do something like this, get to that neckline, and possibly break out further. However, it's not getting above there to close above, to retest this, to continue to go up right now. Okay, so that's what we got to watch for. If we get some closing volume, bullish volume above this yellow line. It doesn't have to be on the hourly. It can be on the 30-minute, on the 50-minute, on the 5-minute. Okay, but if you're an hourly trader, you got to pay attention to that right now. Okay. Now let's go into what we said is we're going to hang out on the 15 minutes today. Okay, so we're going to do something different. I know you guys love 5 minutes. You guys love the lower time frames, but let's watch 15 minutes. Okay, so this 15-minute candle still has 11 minutes to go into the close. We just opened 7 a.m. right now. So this will close at 7:15. We can see there's that yellow line. Are we going to get 15-minute bullish volume closing above there, or is it going to keep rejecting off of it and move back down? So when we're looking at our 15-minute candles, there's where 3 a.m. London, it broke through there. It closed above. Next 15-minute candle continued to push bullish up here, but it came into 15-minute point of interest. There's a body, a wick, and a wick. And then you see the big bearish candle that engulfed and closed below. If you look at 50% of that candle, so let's draw a 15-minute point of control. Let's grab our Fibonacci retracement on this body of this candle. I'll place a white line on these 15-minute candles. because normally I do that on the 1 hour, so we'll do it on these ones. Okay, so white line. See what I just did there? I cut that candle in half, that bearish candle that closed below all that structure, cut it in half. Now I want to find my zone right there, okay, and it's red, right, because it closed below. And then I see those 15-minute candles came in there, back down, came in it, back down, came in it, back down, again, came all the way up there again, then they really pushed it down. So if I stretch that into the future, you can see how close London, just after London market open, got almost transacting back in there, and then they pushed it back down with that lower high. So even today, are we going to come all the way back up here, and are they going to reject it back down there, or will we close above this? So that's a block above us. You can see coming from 10 p.m. Also, London also tried to hit it and missed it. So are we going to come up and try it again, or are we just going to continue to diverge away from it with a 15-minute trend line? You can see from the top, let's start it like right here. You could go down like that and see it already broke, or you can continue to stay, again, if you pick the wicks or the bodies, that's your choice. Okay, remember we did it with the daily looking at the wicks, so I want to stay with the wicks right now. That's what I always said. If whenever you're putting a point of interest line, whether you're using the bodies, stick with the bodies on all time frames. If you're using the wicks, stick with the wicks on all time frames. So I can see I'm putting it at that wick, coming all the way down to that wick, and I'm continuing to coming down, and I can see that we're getting close to it, but we're still below it. So I'm going to use this as a white line, okay? Remember, yellow represents daily. Everything that's white is representing like 15 minutes or hourly, okay? So you can see how everything is moving. We're still bearish off the top. We're building a little bit off the bottom, but notice the volume. It's like thin volume, thin volume, thin volume, thin volume. If I was to consolidate this entire like volume here, this is how the 15-minute bars are trading. We're just consolidating in this area right now. Again, we're flagging. We got buyers accumulating, sellers are accumulating, buyers are 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 accumulating, sellers are accumulating. Eventually, maybe we're going to get a breakout of here, maybe a closure retest, and maybe we could fill back up to there. We could also get maybe a fake out where it closes above here, comes for the retest, but then closes back down in the zone, test that trend line, and then we're dropping back down in here. So extend that consolidated zone. We could also get sellers accumulating more and continuing to push it and close it below here, retest this, and drop to the lowest point of the day and maybe take out those tweezer bottom lows. Okay, it could also be a fake out down here where it comes down impulsively, gets a wick, and goes and closes back in the box, and then does something like that. Okay, so there's a lot what we got to watch for. Okay, sideways till the news. I agree, Samuel. I agree. Maybe there might be a little bit of some bumps during COMEX market open to grab some liquidity and pending orders, but I think the entire markets are waiting for this event right over here. For those you guys just joining us, thank you guys. We got over 200 viewers on YouTube. We just did a full top-down analysis for about an hour on gold. We're at 710 right now, but over here, guys, Fed Chair Powell. This is day 2 of the Jackson Hole Symposium, and today he actually speaks. Okay, so right here, guys, just reading this. Global markets are treading carefully as investors turn their focus to Federal Reserve Chair Jerome Powell's upcoming speech. So that's today at 10 a.m. You can see it's a red folder. It's 30 minutes right after Wall Street market opens, okay? And precious metals like gold, what we just analyzed, and silver slipped as traders adjusted positions ahead of any potential policy signals. Oil prices, on the other hand, continue to rally, supported by supply concerns and renewed optimism over maybe, you can continue reading it, but I'm sure it says something about Russia and Ukraine, and but this is what's going on news-wise today. Okay, so again, when it's coming down, now what I look for, it's going back up. It's coming down, it's going back up. coming down, it went back up, coming down, it's going back up. So it's accumulating. Okay, and there could be an impulse breakout as well with all of this accumulation. So if you're going to take an impulse trade, make sure you have impulse rules, okay? If you're going to trade with confirmations, you're waiting for a full closure, then unfortunately we got to wait for a full closure, and we might witness an impulse break. And if we're waiting for the candle to close, we got to wait, especially if you're on a 15-minute candle. I know it's not easy. If it impulsively breaks right away at the first couple minutes, you want to get in, but you still have 13 more minutes for it to close. You got to follow your rules. If not, you can break your rules. But if you are taking an impulse, you got to understand the implications. It could just impulsively move up and go back down. If you're in an impulse, then maybe just measure where it could possibly go to, like right there. For example, if we impulsively break out, it could impulsively break out and then maybe move where that body and that body is. Okay, and then you can see it's kind of maybe 50% of this bearish candle. Maybe it wants to retest that. So if I'm looking to take an impulse breakout, what I do is I get my measuring tool. Okay, I'm measuring all the way up to that red line. So it's approximately 17 pips. So if it impulsively breaks out for about 15 to 20 pips, 17 is the exact measurement, then I might just close out that entire impulse trade. I might just grab my 15 pips, 17, 20 pips, whatever it is, and close it out. And then wait for the bar to physically close after that, because it could just come impulsively break out of there, come to there, and then just get a wick and get rejected back down, and then close back down in here. But it did impulsively break out. You're waiting for that body to close, and then it closes back inside here. But impulse traders, if it breaks out there, they could get their 10, 15, 20 pips, and then go to a break even, bring their stop loss to break even, maybe hold it, see if it will close up there, and maybe go further. That's how an impulse can continue. But high probability it just comes up there, gets a wick, and goes back down. And if you know what you're looking for, you could grab your pips and dip out of the market. Otherwise, wait for bodies to close. Impulse wicks those candles are the toughest candles to trade because we don't know where they're going to close. And the market loves doing impulse moves. It knows us as retail traders, we're very impulsive, and we're not very disciplined, and we don't have patience. So, market makers can tease us, with an impulse. We get all excited, we go all in, we over leverage our account, and then they laugh at us and they bring it right back down on us. Okay, and then we get stopped out, and then we say, oh, the financial markets are rigged, they're a scam, they're all of our excuses, that we say. But then when you analyze it, you're scratching your head and saying, well, why did I even take that trade? It was an impulse trade. Why did I go in? I didn't even have to take it. So you got to understand that the market does this to accumulate more and more liquidity. It's part of the game. So just learn the rules of the game, and it can continue to help you out as a trader. Okay, guys. Off topic here, but is anyone following stock markets? Stock securities. Sorry. Remember what I was talking about Roblox earlier this week? I initiated a short position. I bought some puts on it because it had negative news. Did anybody pick up on that last week when I was talking about it? The news regarding Roblox, that game that our kids play, had a lot of negative news regarding it around parental controls. So it was trading around $125 a share, and I was looking at just shorting it down to 120. That was the put option that I purchased, and it dropped down to about $112 yesterday. So, I closed it out. I was in the money because it was expiring today at 4 p.m. I bought it early this week when I read up on that news, and it dropped, and I got a 60% gain on that option on the premium. So that was just, yes, Big Slug. You mean the game that my friend used? It has to do with the kids. I don't know what's going on there, but I know my daughter was playing with that. I deleted it off her phone as well. They don't have good parental controls, and some adults can go on there and lure children and things like that. But they had negative publicity. So me as a trader, I look at these things. So that was an opportunity to short a security. Roblox was a good one. Guys, do you guys know Cracker Barrel right now? Cracker Barrel, you know that cheese company? Anybody know what I'm talking about here? Where's my Yahoo Finance? Sorry. Cracker Barrel, it's in the news. Something came out I was reading the other day, so I got Cracker Barrel on my watch list right now. Anybody know what's going on with Cracker Barrel? Restaurant logos and edit? Yeah, it's just something like that, you know. Steers up controversy. Cracker Barrel had an old school logo. You know, it had an old man. Sitting. What is it? Let's look at it. This is what it was. You know, Cracker Barrel logo, and it's been around for like hundreds of years. Yeah, this logo. Okay, so this was the Cracker Barrel logo right over here, guys. You know, an old man sitting right over here. That was Old Country Store. That's what it was. I guess the new CEO changed the logo because she was offended by this. And, you know, went a little woke. They say if you go woke in the stock markets, your company could go broke. We've seen it with Bud Light. We've seen it with a lot of companies that have, you know, I don't care, you know, this is none of my business what they do. I'm not the CEO of the company. I'm just a trader looking for good news and bad news, because that's how I make my money. That's how investors make money, you know. So they changed the logo. Shareholders didn't like it, and it's causing some controversy. And you know, I'm picking up on that. So I'm putting it on my watch list. Looking at the price, so we can see, you know, maybe let's look at the last 5 days. You can see when they released it. You know, I was a little late to the party. I just read about it last night, but I can see these traders that picked up on it early, when they released it, it was trading about $58 a barrel. A barrel, $58 a share, not a barrel. But you see how when they released that news, look at the share price, how it took a dive all the way down to $50 a share. That's huge. Like when we're talking percentages, that's a 12% drop. And the implied volatility, if you had a put option, even if you had a $55 put option, if you had a 52, if you had that 50, that premium of you shorting that market in, you know, that amount of time, your premium would have gone up 100, 200, maybe 300% on your money. Okay, so this is a way to really learn how to compound your money by trading options, but you got to pick up on these things. You know what I always say, the early bird gets that worm who can pick up on these things. So far it's kind of recovered right back to, you know, 50%. If we do the math from like $58, $59 dropping down to 50, what's the 50% of that? It's right back to $55. So you can see, you know, maybe they covered, they got rid of them. Maybe these options are expiring today. Maybe over the weekend, you know, they might say, oh, you know, it was a mistake. We're not going to change the logo, and then it will recover and go back up here. Then you could look to buy a call option. But if they double down on the logo and say, no, we're going with it, then the stock price might come revisit $50 and break. So, you know, just things like this, like that one American Eagle with Sydney Sweeney, you know, just looking at that one. This one, Cracker Barrel, Roblox, you know, just these things like this. You just, every day, there's so many of these news going on around. It's hard to keep up with all of these things. But if you are watching these, you can find some good trades. You know, some people do that. There is a Reddit group that's out there that they short woke companies, and they make a lot of money. So, you know, there is these groups out there, guys. Okay, so just going off of that 15-minute candle, sorry, while we were talking, it did not close above there. Okay, so we got another 15-minute bearish candle coming back down. We're still in this consolidated zone. Now we have this new 15-minute candle right here at 7:15, opened bearish, ignited, and we're pushing down. So right here, okay, it could possibly impulsively break. Again, I'm on a 15-minute candle today. So it's a little different than what we normally do. Normally we're on the 5 minutes. Do you guys want me to stay with these 15-minute candles and we can watch the entire 15-minute candle to close? What you could also do, you see how it's breaking right now? You could now scale down and watch the 5-minute candle officially close down there. See this one that just opened? 4 minutes and 30 seconds. So this is the one that's impulsively breaking down. You can watch for that one to close. If you guys want, we can stay with the 15s and watch at 15. Disciplined trader, thank you. I appreciate that. Best top-down analysis you've ever watched. That's awesome. You know, it just takes time. What I want to do also is maybe we do some outlooks, like some forward forecasts on major securities, higher time frames, like 4-hour analysis. Maybe we can look for some swing trades throughout the week, so we're not always just, you know, looking for intraday scalps and things like that, because we can slow it down. We can slow trading down. We can slow it down to the 4 hours and look for, you know, 200, 300 pip moves over the entire week, and we can continue to monitor those. You can take smaller sizing and let them do their thing, where you don't have to babysit them every 5, 10, 15 minutes like a scalper. You can see what it feels like to be a swing trader, but it's doing the same type of analysis. You're just watching a higher time frame. You got to watch for a 4-hour candle to close, as opposed to a 5 or 15-minute candle to close. Guys, thanks to everyone on YouTube, over 200 viewers. If you guys wouldn't mind hitting the like button, subscribe to our channel if you're new here. Yeah, 725. You see, we're at that psychological number. So we can do this with psychological numbers as well. Okay, so our next psychological number for subscribers today would be getting this to 750. Let's see if we can grab 25 new subscribers and get this to 750. That's going to be our goal and our all-time high resistance for today. So watching this 15-minute candle, you know, half of the time is now exhausted. You know, when I always say a 5-minute candle, when there's 2.5 minutes, half of it's exhausted. Let's watch the second half. A 15-minute candle, 7.5 minutes is the halfway point. So we're at the halfway point. So you see how it impulsively came down there, and now it's coming right back up. Okay, so we still have this bearish head. This is what a hanging man candle is. Will it continue to stay bearish, or will the buyers flip this body and maybe come back up? So you can still see we're in this consolidated range still. We can trade this range if you like. You know, like you can measure it. What is the top to the bottom of this range? It's about 30 pips, right? If you're buying, you can make 30 pips going up, and if you're selling, you can make about 30 pips going down. But you see, it's going up, coming back down, going up. It was coming down on those wicks. It went back up. Then they brought it all the way back down. But that one technically did break. Okay, it did break through here, and now it's coming right back up. But it's got 6 more minutes to the close. So we can wait for this 15-minute body to close. Gold is not doing much. We're not missing out on anything right now. You know, even if we were to look at the 5 minutes, I don't really see it doing too much. Yeah, you could have shorted right there, caught your 30 pips coming down. But still, relative to, you know, we're not trending basically. We're not doing anything. It's not the greatest volume to be trading right now, but it's still good for learning. It's great for learning. DCY, sorry, question. How do you watch for a retest candle at a entry point? Did you wait for the full closure or just bounces off from a key level? Do you mean, DCY, when a body closes above or below one of these areas? What do I look for to buy the retest or to sell the retest? Is that the question? Sorry if I understand the question correctly. Okay, so we've got 4 minutes and 20 seconds to go on this 5-minute candle. Sorry, 15-minute candle. But if you're watching the last 5-minute candle, if you're just looking at the 5-minute candles, okay, so that one came down, closed right there. That was an impulse 5-minute candle that broke a low. But if you waited for that 5-minute candle to close, it closed right back in here. And this is the next 5-minute candle opening with 4 minutes to go. But we're watching it on a 15-minute candle. So are they going to flip this? They haven't flipped the body yet, okay? Notice when this 15-minute candle opened, it was ignited bearish, came all the way down, and buyers are buying it all the way right back up. We're right here. So we have not came back to the opening position to flip this to a blue candle to push up right now. It's still bearish. This is called a hanging man candle right now. Okay, still got that bearish head, still has not been flipped, because if it flips, it can turn into a bullish pin bar if it gets a wick, bullish pin bar, and if it closes right at the highest point, flipping blue, it's a hammer candle. Right now, this is called a hanging man. So it's still the sellers that started this position when this candle opened, they're still there, holding their position, offering, and absorbing these buyers. Okay, so it's coming right back up. Again, the question is, are they going to flip this body of this candle? What do you guys think? Let's have a poll here. Do you guys think the buyers are going to flip this candle blue or sellers are going to hold it down black? What do you guys think? Black or blue? With 2.5 minutes to go. What's everyone's prediction? Black? Blue. Okay. Black, blue. So it's 50-50, everybody. Okay, so some of you guys are black. I see that. Some of you guys are blue, right? That's trading, right? We're taking a good, guess with probabilities. But we don't know 100% until it physically closes in a minute 50. Okay, so the sellers are still holding it down black right now. A lot of you guys are black, so a lot of you guys are bearish. Joel, purple? We don't have a purple. I'm sorry. Some of us are colorblind, Some days we see purple. Purple is only for a high and low on the day. Color doesn't matter. You're right. All candles matter. Okay, we're not talking about race over here. We're just talking about the color of these candles. Again, don't go woke on me, guys, on the candles. It's just we're looking at volume. Red. All candles matter. All time frames matter. Okay? I'm going to get a t-shirt made saying all time frames matter. Don't just discriminate against one candle. Okay, so now we have 48 seconds to go. Okay, so we have this bearish head still holding. Hanging man is still holding. So, like if we just look at, where this 15-minute candle closed and where it opened, you can see it opened. We pushed down, so we did take out a low. We did create a lower low from this structure. But the buyers are there bringing it right back up. So, will this candle allow us to take a trade? Look at now the next 20 seconds. Okay, now the buyers are bringing it right back up. Ooh, it's going to be close with whoever said black and blue. It's gonna all those were our only choices. Okay, so here's the close. Closed black with a little bit of bearish. Now, did you see how it opened bullish, ignited, and just came up just a little bit and then rejected it back down? Notice the size now of the wick. Okay, if we just measure the wick, let's measure it. Our wick distance is approximately 15 pips. So the sellers have to continue to push down all the way down this wick 15 pips to fill that wick and break a new low. So it would be about 20 pip drop. Okay, so now they are coming down. They're trying now to backfill this entire wick. It's not a short wick, right? It's not like a wick with 2 pips or 3 pips to fill, then drop. It's got to fill. I just measured it 15 pips to get just down to the lowest point, equal low, and then maybe drop for another 5 pips. It's got to be like a 20 pip drop. So you see how it just came down right now and got a higher low, and it's coming right back up. So here's the resistance now. So if it breaks through here, we could have a bullish move coming back up. Okay, so this is what we call now an impulse candle breaking out. Did you see how it impulsively just broke above that red line and then it got rejected back down? But now it's continuing to fill up. So we're watching a 15-minute candle. We still have 13 and a half minutes to go to watch this guy here. So it's going to take, some of you guys are saying, Ron, why are we not trading? Oh my God, we got to wait 13 minutes. That's crazy. That's this particular time frame. If you don't want to wait 15 minutes, there's the red line, there's the body volume. You can now dissect. You can go down to the 5-minute candle. So there's the 5-minute candle that just impulsively broke out and came back down. You can watch this. Now, if you don't want to wait 15 minutes, you now have cut the time down to 3 minutes. You just got to be patient and watch 5-minute candle closing in the next 3 minutes. If you guys don't have any patience, you guys are like me, and you want to come to the 1 minutes, you got to basically look for a 1-minute candle to close above there. But remember, 1-minute candle doesn't hold as much weight as a 5-minute candle. A 5-minute candle doesn't hold as much weight as a 15-minute candle. A 15-minute candle doesn't hold as much weight as a 1 hour, and I can keep going on and on and on, okay? So when you trade the lower time frames, you got to know exactly what you're looking for because they don't hold a lot of weight. This 1-minute candle could technically close above there, catch a retest, go up for, just to fill up a little bit of imbalance for about 10 pips and maybe come right back down. So you got to know exactly what you're looking for. So when we go back to the 5-minute, you can watch this thing for 2 more minutes, or we stick with the 15 and we watch our 15. But this is how the market is trading. Okay, it's still choppy in my opinion. We're still in this consolidated zone. Yeah, we're learning a little bit today, but this is not the greatest volume to be trading on any one of these time frames right now. So it's good to learn patience. A lot of us need to learn patience. A lot of us need to learn discipline. A lot of traders ask me, Ron, how do I learn patience? How do I learn discipline? And my answer is, I can't teach it. I can't teach it. You got to basically teach yourself. You got to teach yourself to focus on the time frame that you like to trade, not what I like to trade. Okay? Figure out what's best for you and then stick to as much as you can waiting for those bodies to close. Yes, you might miss out on a move, but our move is we're looking for buys above this yellow line. We're not looking for buys in the middle of this zone. If you are, you got to understand that you're trading in a consolidated zone. So yes, it could come up a little bit and it could go right back down. Even if you're selling inside the zone, it could go down like that and come right back up. So what we're looking for is we're looking for like a bigger move today. We're going to see who will accumulate more. We're looking for maybe what will happen above here this morning. Like there's our, you can call it supply, you can call it resistance, you can call it a red box. And then below here, the reason why I'm making it this big is because just that impulse candle that just broke down came back up. So that is kind of like my green box. You can call this a demand zone. You can call it support zone. You can call it a green box. You can call it a Mickey Mouse zone. I don't care, again, what you call it. Okay? But just understand, We're trading in between here right now, okay? So now if you want to watch the 5 minute, this 5 minute candle is closing right now in 5 seconds. So I'm not trading it, but we're going to educate on it, okay? So I'm going to walk you guys through this. Okay, so did the buyers close above this red line? The answer is yes, okay? If you say no to me that it didn't close above here, then we got to do some, we got to continue our learning. Okay, so let's just talk. This was support there, it turned to resistance there. Now with the volume closing above, this red line could momentarily act as support, okay? So what we need to see is, will it come back down to retest this and go back up, for example? If you're waiting there, you have to wait. That's what's called a pullback trade. Will it come down there and do this exact arrow? If it did, oh man, I would love trading like that if it did. It could just come down there and break again and go back below there and then start dropping, come back for a retest, and then it's back to resistance and then we're dropping, okay? So right now, what did it just do? It opened bullish and it filled that wick and it came for a new higher high and then it got rejected back down, okay? So that's the lowest point. It didn't come back to retest this as of yet. Maybe it might not come retest this right now. Maybe we'll continue to go and then retest this at a later point, okay? So we can watch that to see if there is going to be some support, okay? If I'm watching the 5 minutes, it's already made one leg down. See, it caught some support there at the green box. It's coming back up right now. Will it find a neckline here or back up there? If it does come back down, we're looking for maybe a retest there for a higher low or like a physical double bottom down in there, okay? Right now, it has not came back. So all of these traders that are waiting to buy at this red line, the retest of it, they're still waiting in the market. They're pending, okay? If we look on our 15-minute candle, our 15-minute candle that came in the green zone, picked up all of those buyers and came back down. But see, long distance to fill that wick, came higher low, and then we broke, and there's that move going back up. So, sometimes trading takes a little intuition. I always say that. Sometimes trading, but you got to see how it came down bearish, 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 got in that green zone, picked up all of those pending orders, got those buyers, got that volume, and closed right there. And then when it kind of broke right there, maybe that's, a time where, like, if I was trading inside the zone here and I want to trade this stuff and I'm looking for trades inside here, that's where I would technically look to buy that impulse move. Breaking above there, I would be trading maybe into 50% of this candle or right at the top of those bodies right there, okay? Like if I was in that, I would definitely right now be like maybe at a break even or scaling some out because I know it could definitely come back down on an impulse. But if you're following like these 5 minutes, the 5-minute candle did close above. It initially came down, but has not retested this point yet. So you see the volume is diverging away from this line. This line is still in the market, okay? We can place an alert here and we can wait for it to come back down to us. That's what pending means, okay? So we could even, place a pending order in the market if you want right there. Or you can wait till it comes to you. You'll get an alert. Then you can watch and see. Will it catch a wick there? Will it bounce off of this? Or will it close below and then it goes back down deeper? Then we buy the green box, right? If you're watching the 1 minutes, okay? So that 1 minute candle broke impulsively, closed below it again. Inverted hammer. Opened bearish, came back, made that higher high, and look at where it closed, right there. That candle at 733 was the candle that opened bullish, ignited, and started to move and get where it is right now. So even the 1 minutes have not even retested this red line as of yet, okay? But what do we notice? Okay, remember the lowest point of the day were those tweezer bottom equal lows. Right there, we've made a low at 415. We've got a higher low. Okay, we've got a green block. We've got a higher low. We've got a higher low. So we know that the 15-minute volume is accumulating on the bottom of our depth of market, but we still haven't broke above this daily point of interest, 3331 or 3331.50. Okay, so, and there's our 15-minute trend line, this white line coming down. So you can still see the volume is still clumped in this area. We're not going anywhere, basically. Yeah, we missed out on a little quick buy, but you know, measure the move. And would you, if you bought that impulse and it came up for 15 pips, did you do anything? That's another question. A lot of traders will take that impulse, they make 10, 15 pips, but they're looking for 20, 25, 30, 50, and then it comes right back down to where they entered, to a break even. Maybe they're not at a break even, maybe their stop loss is down here, then the market will come down and hunt for your stop loss and take you out. So, you know, if you are taking those trades, again, that's why I say measure the distance, what you're looking for. Well, like I said, always use bodies of points of interest. There's a body, there's a body. You know, if I was in that trade, right, I'm looking for about 50% to come up there. It came up, but then look at where it got up to. The body to the body. Look at where it got rejected, right there. So it's coming right back down now. So our 15-minute body candle is going to close in 4 more minutes. So it came all the way back up, and it's coming all the way back down. Will it close below here? Then it might have one leg to continue to push down further. Okay, so now it's touching the red line. Did you see how I just got an alert now? So there it just touched the red line. So, you know, if you had ants in your pants and, you know, now you get the opportunity to buy a pullback. So if you FOMO buyed the highest point up there, FOMO, fear of missing out. Oh my God, this is going to go high and I'm going to miss out. I got to buy. How many of us have done that in trading? FOMO trading. I've done it a million times. And I never really won any money by doing that. The market, I was this guy buying the high. I was this guy buying the high. I was that guy buying the high. Then the market came back down. I would buy the high. The market would come back down. I would be, oh my God, I'm going to miss out on a move. It's never going to pull back. Buy the high. And then all of a sudden it comes right back down. And I'm like, well, why didn't I just wait? What the hell was I FOMO-ing? So no more FOMO. Okay, so there. If you wanted to buy at a discount, you're getting your discount now. Okay, you're getting a 15 pip discount from up there. You're getting your discount. But now look at it. This sellers might close below there. That could be a false breakout coming back down. If you look on the 15s, look at the 15. It came all the way up there impulsively. And it came all the way right back down. Now we're closing in 2.5 minutes. This is now a bearish shooting star. Or sorry, a bearish pin bar. Could turn into a shooting star. Joel, you want a shirt that says, I like big pips? I've got a shirt, Joel. It says, pips come in all sizes. My wife doesn't like when I wear it when we go out. but it says, pips come in all sizes. Big pips or little pips? We love them all. Okay, guys, what time is it? It's almost 7:45. In about another approximately 30 more minutes, we're going to have the COMEX market open. And then, do we have any 8:30 news? We just have some Canadian news. And then we've got Wall Street at 9:30. But everybody is waiting for the Jackson Hole Symposium Day 2, Mr. Fed Chair Powell will be speaking, okay? And he could hint interest rate cuts coming in September or not, and the markets will listen and they will move today. So let's be like them. Let's be patient. Let's be disciplined. Trading upwards, you just got on a call. No, you're not too late. You're perfect timing. We just did a full analysis on gold. We're on the 15 minutes. We haven't. We're just trading in this zone right now. We haven't initiated a trade. Well, I haven't initiated a trade. just watching this consolidation unfold. Now we got like basically a spin top candle. So you can see the indecision. When it first opened, it was very bullish. It broke out of there impulsively. Then it came right back down to there. And now it's coming right back up. Look at where the volume might close. Right back at that red line. But now, let's see where the volume will close. Will it close above or below the line? Okay. Last second, sellers. See how it was blue, and in last second the sellers engulfed them and closed it. So that technically is a bearish candle. It's got bearish volume. So this red line is now still resistance. That 15-minute candle impulsively broke above there. It came up to these points of interest. Yes, it was a 15-pip breakout, but had you done something, fantastic. If you didn't, now you're still you could be possibly holding the trade still, but you're dealing with this consolidate. This is this frustrating zone. Buyers are getting frustrated. Sellers are getting frustrated. The market is just adding both ways. So it's accumulating, and eventually they're going to redistribute this volume. You know, it's not just going to continue to consolidate in here all day. We do have COMEX market opening up in like 30 minutes. We've got that Powell news coming up at 10. So the market is accumulating. Someone is going to get squeezed out of the market here. We know it's going to be either the sellers or the buyers. You know, if the sellers keep accumulating, they're close to that low of the day to take it out. But also, buyers are protecting the low of the day currently, okay? And maybe possibly break out of this trend line. So again, like the 5-minute candles, you know, like these are the 5-minute candles. That one closed above. It pushed up. When it came back down to retest, did it get a wick at that red line? No, it came down and closed right there. Now it's opening again, bullish, coming right back up. You know, will this bullish body close above here? Will it get rejected back down? That's if you're watching the 5s. We'll stick with the 15 today. Do you guys want me to stay with gold right now, all the way till like COMEX, till like 8:45? Do you guys want me to do some analysis on NASDAQ and US30 while we're waiting? Or do you guys just want to continue to watch this with me? Armandi, do Dow and NASDAQ so it's done? You guys want to do that? Yeah? Okay, gold's doing that. Okay, if you guys are good, maybe just give me a heads up, okay? If you guys are watching the 15-minute candles, you know, if a 15-minute candle closes above this red zone, let me know. If a 15-minute candle closes below this green zone, let me know. Okay, that's it. We'll work as a team. You guys let me know. Just say, Ron, heads up. 15-minute candle closed below this zone or above, and then I'll come and we'll chart it and then we'll watch it. Okay, but in the meantime, let's get our charts prepared for NQ and US30. Okay, so I'll start off with US30, Dow Jones. Okay, that's how it. Do you guys want me to stay with 15-minute candles on NASDAQ and Dow Jones, or do you guys prefer the 5-minute candles with these? Do you want to stick with 15 today? It's up to you guys. I don't mind. You guys let me know. 5s? You guys love the 5s. One minute too fast, Reese. I don't know if people can handle it here. Some people say I talk too fast. Man, 1 minute candles, you gotta talk fast. You gotta, you know, like absorb everything quickly. You gotta see what's going on. So, you know, when it's learning with those, it's fast, okay? Anyways, this is US30, Dow Jones, okay? Dow Jones is in the news. Warren Buffett's in the news. Berkshire Hathaway's in the news. He sold a lot of Bank of America. He sold a lot of Coca-Cola stock. Sold some Apple. He started to accumulate United Health. United Health comprises like 10% of this entire index. So that's why United Health saw a little bit of volume go into it and saw it carry Dow Jones to all-time highs. What else we got going on in DJ? We had our manufacturing and services news released yesterday. Came out pretty positive. Okay, Okay, so back here in December 2024, we came in there, back down, came in there. You know, when you stretch it into the future, you see that's a clear one top, double top, and in the drop, M pattern, however you want to look at it, it's visual, it's there, stretching it into the future. Now we can see again, we traded in here early July this year. We traded in here end of July, early August. We were trading in here just last week, okay? See how the bodies of volume are just consolidating in this zone. It's going bullish. That's when we hit the all-time high. Then it's coming in here bearish, then bullish, then bearish, then bullish. You know, it's just sideways right now. Fed Chair Powell is going to have a big impact on how we close and how we move into next week, okay? So that's our all-time high, 45,283. You know, we got our red zone. We're trading in it right now, okay? So we're in it. We're trading in it. Still red. We have not closed above it. We've had a couple impulse breaks, but no volume closing above. We've had some, yesterday we had an impulse break to the downside, but again, no bearish volume on the daily close below there, okay? So it's important to look at that, okay? Do we have an area of support right now that we can see with this structure? I would go right here. Like, you got to be able to spot that structure in the market right there. If you can't, I suggest you smoke some weed. I'm just joking. I'm joking about it, guys. It's a joke, okay? It came up right there. It went right back down. You see it stopped right there. Went right back up. And then someone's going to say, oh, Ron, well, why didn't you make the green zone and come all the way down there? Yeah, you're correct about that. Or someone will say, well, Ron, why didn't you go make the green zone down there? The point is not just to make the green zone like this. The point is to make a zone, and also look for a fake out, okay? You can see they did close it below there. And then the next day it opened, like I would flip that green to red. Then it opened bearish and came down. It didn't break that low, so it's coming back up. When it comes here to retest, do I see a wick get rejected and come back down to take sell? No. When it comes into 50% of that zone, do I see a wick there rejected to go back down in that result? No. I see a big bullish engulfing candle come up and close above that, and then the zone flips green. Then I can see when it came in there the next day, back up. Came in there again, right there, and kind of consolidated. Bearish, bullish, bearish. That was that battle, and the buyers won it, and they redistributed the volume to the upside. Okay, and then this fake out was at Friday, Monday, reversal. Friday they closed it bearish below there. You know, a lot of sellers probably added short positions on the weekend, thinking that the market is going to dump the next week. And what does the market do? It faked them out and came right back up and moved away from them. Okay, so that's still a zone block in our market. We're nowhere near this right now, so we don't have to really talk too much about that. But what we got to talk about now is here's a body that closed above structure, closed near the high, and a point of interest. So let's just mark that as a daily yellow line, just in case we come back down there. That's a good area to potentially catch support. That's where a big body closed. That's where the next body opened, okay? Now what do we see in the market, okay? So some traders see it like this, okay? So it came up one top. There's the neckline. There was the second top. There was the break, the M pattern break right there, but that was that Friday, Monday rotation. So it kind of faked the market out from selling right there. But then it came back in. So there you can look at this as kind of like a one bottom on that retest. There's now a second W coming back up. So we're having difficulty breaking through this W pattern. This is the all-time high. So it's coming right back up here. This might be a triple top, you know, three tops. There's one top, two tops. This might be a triple top coming back down. We came down yesterday, but no closing follow through because maybe today would have been a selling day if we did close. Now it's coming again right back up. So, you know, we could continue to consolidate in here, maybe try to break out for a new all-time high. However, if they bring the volume down today, then maybe we close below here, then maybe we're going to sell off next week. That's could happen, okay? Now let's kind of just look at how we've been trading this week. It's been pretty shitty. If you look at Monday this week, nothing. You look at Tuesday, spin top, nothing. You look at Wednesday, nothing. You look at Thursday. Thursday was interesting yesterday on that news. We did come down bearish all the way down there. So let's just mark that as a daily point of interest. It's very, very, very close to this yellow line. So what I would do now to mix up these lines is I would move this one to about right there, to about 50% of this big bullish candle, or to structure where you got a body and body. if we go 50-50, like right there, okay? And then you see how I'm spacing them apart. If it does come down there, I'll acknowledge that area, but it's too close to have them like this. So go back down to 50% of this bullish candle. You got support from yesterday. It came in there, but look at the response. Came right back up and closed. Bearish hanging man candle. Okay, so it's got that bearish volume. How did we open today relative to where we closed yesterday? Point of interest right there. Close, open. It was initially bearish today. It was bearish, 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 bearish. Remember, look at the size of the wick. We were just talking about that on that 15-minute candle. So same thing with the daily. It's got a rather large wick. It's not a little short wick like this one right here. It's a pretty long wick. You can measure the distance, okay? That's what I also do. I measure the distance so I know. It's approximately 230 pip wick. So we need to drop 230 pips just to get down to that low, and then maybe break another 100 points to make a significant drop. So we need like a 350 pip candle to come back down there and drop. We were bearish where it came down, bearish, 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 bearish. But you see, it's got a lot to fill. So as it was coming down, the buyers came in at the lowest point of the day and made a higher low. There's our purple low. Okay, that's our lowest point of the day. It's higher than yesterday. Technically, higher low. Buyers are there. They come all the way back up, all the way back up. They're pushing it all the way back up. They come to the opening price and they flip the candle blue, and look, it's coming all the way up, all the way up, all the way up. Where did it stop? Point of interest, right? Guys, just like that 15-minute candle that we just saw, that impulsively broke out, and then where it caught its wick was at those rest of those 15-minute bodies right there. Same with this one. Same shit. All candlesticks have the same characteristics. It doesn't matter what security we're trading. They all have the same characteristics. It's retesting where this candle opens. Okay? And it came up there and got rejected. That's technically a lower high, lower high, lower high. We're in the red zone. So sellers are still there pushing it down. But we still have this bullish volume on the daily. Will it continue to come up to the highest point today and break out? If it does, are we going to go straight to the all-time high? Possibly. If Powell says something to cause it to go up like that, yes, we could definitely break through this. But we got to get to the top of the red box to do anything. Then we got to fill to that next previous candle right there. Before we get to the all-time high, it's got to fill to that. And then maybe the all-time high. Then if we break, what's the next area? Okay, again, psychological numbers. You know, maybe, where are we at? 45,283. I would say 300 is like the all-time high. I would go to 400. Go to 400. 45,400. Your next 100 pip psychological area. Okay, you know, that's how you can decipher. But if they kind of reject all of today's volume, maybe we close below here. We could start next week a bearish week coming down if there's no fake outs or anything like that early next week. So we've got a strong bullish candle right now. Okay, it's a bullish pin bar. If we now look at the 4 hour, what do we got on the 4 hours? We have when we hit the all-time high, came down, came back up, lower high, they pinned it, they pushed it back down, came back up, lower highs, they broke for that lower low. That was yesterday. Came back up today. I can see from Europe, from 2 to 6 a.m. It came down, created the lowest point of the day, higher low, higher low. 4 hour candle is still coming back up. Strong 4 hour volume coming straight from Europe. Okay, now we're getting into New York 4 hour candle. That's going to close in 2 hours. And we're going into 8 a.m. right now. So it's going to close right when Powell speaks at 10 a.m. So it's going to be an interesting 4 hour candle. If it pulls back, where's 50% of our 4 hour European volume? Let's figure it out exactly. Grab our Fibonacci tool, opening price, closing price of that volume. I'm going to place a white line because now I'm messing around with the hourly. Okay, so that's my hourly support. If it comes down there, also I can draw a zone. I know I'm in the big red all-time high supply zone, but maybe my hourly 4 hour candles are building a little bit of, you know, a fair value zone in here. Will it continue to hold? I don't know. Will sellers close it below here and push it back down? Possibly. But if it comes back down here, going with today's volume, maybe if it comes down there, maybe it holds, maybe we'll continue to go back up. Okay, so if we're waiting for a potential pullback in there, we can place an alert at that white line, add an alert. Yes. Okay, I've created it. There's my clock. I'll get an alert if it comes in there at some point today. Maybe it doesn't come in there today. Maybe it does. Okay, we're getting rejected at the highest point of the day. You can see above us, we do have resistance. So maybe it will come back down. Okay. Technically, what it looks like is a double bottom on the 4 hour. If you look at it like this, it came down, one bottom. Here's kind of like where the neckline is, where it got rejected right here. And then it came back down, second bottom. And we did officially close above. And now if we get that pullback, that could be that longer move, right? But if it doesn't pull back, what happens if it just continues to accumulate, come back here and break out? Then it breaks out on this 4 hour candle impulsively. But what we can do is we can start to maybe look at the hourly, 15-minute, 5-minute. Okay, so these are our hourly candles. Big bullish one started in London. Okay, pre-London came all the way down. That's what created the lowest point of the day. Came back up. Big bullish candle coming out at 3 a.m. closed. We're still above 50%. We're holding it. Next candle didn't come down to retest. Just look at this small wick. Small pullback, that's the firecracker. There's the explosion, came right through there. It got up to exactly to that wick, you know, right there, filled. So we still have not pulled back into that 4 hour point of control. Maybe it will come down. Maybe we could buy in there. However, it could be holding some hourly support right now in the market right here. We've got a body, you know, a body right over here. Could be holding some support in this area. Kind of don't want to mark it up right now. We'll see where more of these candles close. But we hit the highest point of the day right there at 6 a.m. We came back up to retest it. It got rejected back down, came back down. So will we get that pullback down in here, or will it continue to come back up and test that high of the day? That might be a second top if it tests up there, or continue to drive. Okay. So our hourly looks like a double bottom, you know, a funky one, where you look at all of this as one bottom. There's the neckline. There's the second bottom there. Came through. There's the first candle that did close above. So, you know, a pullback in there would be a proper pullback. And that's where you're buying, again, at that white line where it was resistance. Now it could be support right there. And then we get that push up, okay? So if I'm looking to buy US30, I'd entertain a buy rate around here at around 44,850. A better buy would be deeper at that yellow line. Okay, the yellow line is a much better buy than the green zone, but the green zone is going to be the structural retest. The yellow line is a deeper discount at a daily line. Okay, so you know, here's a good buy. There's the better buy, and if you can buy somewhere near the lowest point of the day, that's the best buy opportunity that you could buy on discount. Will it hold up? I don't know if it's, but I'm just saying where there's good buy opportunities. Okay, if we look at how everything is moving on the 15 minutes, guys, if we were watching this, we did our analysis earlier on. We woke up early today. You know, there was our first 15-minute body that closed above that 4 hour structure, and there's where it pulled back in. You know, we could have bought somewhere in here if we were trading, and we could have made some profit coming all the way back up to that daily high. Now we're getting a pullback. Still holding. Will we come back up? Double top? Will it drop? Or are we going to get a lower high and drop into our green zone? Maybe we can look for some buys in there. Okay. Remember, it's good opportunity to buy in there. Better opportunity at that yellow line. They break that zone. Like, for example, if it comes in here, that's kind of what I'm looking for a buy. But if it breaks, you know, comes down there impulsively, come down there, catch a wick, then maybe go back up. Okay. So that's US30 on the 5 minutes, or sorry, 15 minutes. We'll continue to watch the 15s. Now, if we break above this purple line, where could we go? Like right there, there's a big, yeah, that we could fill those little wicks right there and try. But this is where there's a bigger, you know, there's body, a body, and there. So I would place like a white line, you know, somewhere like right around there. 40, look at it, 45,000 exactly. 45,000. See there? That's a body and a body, a body and a body. Nice psychological area. So if we can break above our daily high at 940 and get up to 45,000, that's a 60 pip zone. I don't even have to use my measurements. I passed grade 3 math right there. So there's 60 pip zone, right? So I could grab myself 60 pips just to fill that imbalance from, if we get a daily high breakout, to fill up to that hourly resistance. Maybe it will go higher. Yeah, it could. but let's target that area as first location. Okay. US30 is trading pretty clean. This is nice on the 15 minutes. We got a nice move coming up, good pullback. It's not too choppy. So now what we can do is we can add our daily bar indicator just to remind us how the daily is moving. There's our opening price. We came down to the lowest point. We picked up, came to back. We hit the highest point of the day right there. We're getting a slight little pullback. Maybe we can get good buy opportunity somewhere just near at the open or above the opening price. Maybe we'll come back up to that high and break out. Okay, but if we lose all this today, if we lose our opening price, could close, and then sellers could push it down and fill today's wick, depending on Powell's news today. Okay, looking at the EMA 9, we're right at it, and the EMA 200. Look at where the EMA 200 is, right in our zone where we're looking to maybe possibly get a buy in there. So when we're looking for confluence, our 200 EMA is right in there. Our 4-hour point of control is right in there. We haven't really tested deep down in here. It was just a quick little retest that was early in the day at 4:30 a.m., but has not came back down into there yet. Okay. And if we look at 15-minute structure, right there, we're getting a pivot right there. So you see how it came down and stopped. Okay, so far we got 15-minute support in the market already being established. Okay. Okay, how was that analysis, guys? Are we good to go? We're going to leave US30 right over here on the left side. So that's great. We got US30 out of the way. What time is it? 8:06. So there's NASDAQ. We'll get NASDAQ. Let's just take a look at what gold is doing. Okay, so gold. Let's pay attention to gold now, okay? Because we've been doing it all morning. I'll come back and I'll do NASDAQ. We got lots of time, and then we'll watch those two going into Wall Street and going into Fed Chair Powell at 10 a.m. But let's focus now. Let's put our gold hats on and think about gold right now. So we are still trending down. Remember, I'm on the 15 minutes today, guys, okay? So 15 minutes. I will even write up here so you guys know. 15 minutes. Look at Ron being all fancy today. Okay, so 15 minutes. Just so we're on the same page. This is a 15-minute candle, okay? So we came down again. Did it break a low out of that green zone? Yes, it did. It broke for that low. What was the response? Buyers again are pushing it back up. Will this 15-minute volume, we're at the halfway point, 7.5 minutes, will it continue to come down and close below there? Or will the buyers come back up and, close it above this red line? Maybe we'll get that move coming up, okay? So this candle is closing in 7 minutes, and it will close at 8:15. And then we're going to trade our next 15-minute candle, which is from 8:15 to 8:30. So that's going to go through Colmex, that one, okay? Thank you, guys. 300 viewers on YouTube on a beautiful Friday morning. Juma Mubarak to everybody. If you guys can hit the like button, please, guys. It does help find new traders, does help us grow here. So hit the likes. Subscribe to our channel if you haven't already. Let's see if we can get this to 750. Ooh, 10 more, guys. Let's get that 750. Just like, 10 more pips. Let's say it's like pips. Guys, this is 82,740. There, we just got 1 pip. We got 1 new subscriber. So we're 9 pips away. We can do this as pips, guys. We can learn how to do pips here. So this is a big index, 82,741. Let's see if we can get it 8 more pips. Maybe we can hit that resistance. Let's go. Okay, so let's watch this 15-minute candle. Now, I'm going to ask you guys again. So remember I asked you before this candle, you guys said, would it be bearish or bullish? Some of you guys were correct. Some of you guys were wrong. Now, let's ask now. Do you guys think in the next 5 minutes and 50 seconds, this candle is going to close bearish below this green zone, close below there, or do you think it's going to close above the green zone? What do you guys think? I'm saying the question is above or below the green zone? Above or below? It could still close above the green zone and still be bearish. Will the volume close above or below? Close below, Samuel. Why? I'm going to ask you, Samuel, why do you think it's going to close below? I know I'm putting you on the spot. I know some of you guys don't like that. But why do you think, what is your bias saying that's going to close below? Remember, we're close to the lowest point of the day. Lower low, higher low trend line. Perfect. That's perfect answer. You know, we got the lower highs above us. Lower highs. Trend line is pushing down. Okay. We've created some lows in the markets. So yeah, definitely we could be continuing to trend down. Okay. I know it sucks watching a candle fall down and you're not in a sell. Okay. So does that just mean we forget all our rules and just, you know, hit a sell button because we're FOMO, fear of missing out, and we just want to get in? Or are we actually going to physically wait for this body, this candle to close? If it closes below here, this might be the first time that I'm going to turn this green box into a red box. Okay. We've had it come down there, right in there. It went back up. We had it come down there. It went back up. We had just the previous 15-minute candle come down there and it went back up. Now this one again is breaking, creating a new low, but will it physically close below here? Okay. So we're closing in 4 more minutes. Do you guys like the 15-minute candles, or is it kind of too slow for you, or is it right up your alley? Is it a good... Guys, 300 viewers and we got 145 likes. Let's try and get it up to 200 likes. Today's a big day in the markets. It's too slow for you, Bruce? Reese, you always have the 15-minute on your screen, but then lower for entries. Perfect. That's nice. Okay, guys, look, let's pay attention here, okay? So we're coming to the lowest point of the day. This is prior to COMEX, right? COMEX is going to open in 8 minutes. So let's watch what they're doing. Are they going to take out the lowest point of the day? Are they going to bring it right back up? Are we going to close near the lowest point? Are we going to make our green box red? Are we going to look to sell a pullback, right? Benz, good morning. Welcome. Thanks for joining us. Okay, so what happened? We hit that lowest point of the day, but technically it did create a lower low. Okay, if we zoom in where our previous low was, they did create a new lower low. Okay, but got a big rejection coming back up. Okay, so we have less than 2 minutes. 1 minute 55. Let's watch the close. Okay. Okay, so it's coming back down. Now we have 90 seconds to go. Okay. So, you know, if it closes like this, I'm going to flip that green box red. And what I could be looking for is for buyers to bring it back up and maybe sell relative to that zone, maybe to push it back down, to continue to push down, right? If I want to sell. Okay. Otherwise, you know, it might close. If it's a short wick, a 15-minute candle could open and then just start breaking. And then you gotta engage in a sell. Or you gotta wait for that pullback at a premium area, okay? And you might miss out on a move. That's a possibility, but that's all the patience and discipline in trading. Okay, so this body is going to close in 45 seconds. If you're watching the 5 minutes, okay, so the 5-minute candle did close below. It did come back up, get rejected, and you see an ignited 5-minute candle open at 8:10 and just started dropping down, okay? but we're watching these 15s. Okay, check your spreads, check everything. We are going into COMEX in just 5 more minutes. Here's the close. Okay, so I'm going to assume it's going to close below there. I'm going green to red. Okay, so open bullish ignited. Will it come all the way up? Where's 50% of that big bearish 15-minute candle? It's right there. Okay, so what I'll do is I'll bring my red zone right down to 50% and maybe my 618 kind of, and then the 382. So I'm just manipulating kind of my zone that I had earlier in case it retests inside here. Okay, so now that I've done that, you can see we've moved out of the consolidation zone, out of this zone above us right here. We've moved out of it. Okay, so we did close below. Right now it's coming back for a retest. So let's watch now. Okay, so it's coming up. Will it retest right inside here? Right below it? Okay, so you know if you want to sell a retest, we got to get a rejection in here. Otherwise, it could be bullish, buyers buying at the lowest point of the day and bringing it right back up. Okay, so this is the official retest. It's coming in here. It's got a wick. Will the sellers absorb all of that blue buying volume and bring it back down to the lowest point of the day and break it down? Or are these buyers going to cut right through here and bring it back in our consolidated zone above us? Okay, so it's not easy because this is all forming right now at the lowest point of the day, right? So it's not like we're trading at just any area right now. We're trading at the lowest point of the day with 4 minutes to COMEX opening up, okay? Sanger, it could go up or it could go down. Excellent analysis, man. Wow. That's good analysis. Thanks for telling us that. Very insightful. Do you sell courses? I'd like to subscribe. You got me? Okay. Thank you. Drop your link if you guys want. Sanger says it could go up or it could go down. That's how much do you charge per month? Yeah, very very insightful. But that's what you get with most mentors. Yeah, it's going to go up or it's going to go down. Well, thanks. You'd pay $5,000 for that? Joel, I'd pay $10K for that. That's... Okay, guys, so you see, it did not retest that red zone. You know when it came in there, okay? So it got a wick, but pushed back down. Remember, this is a 15-minute body. So look at it now, the response, okay? So now we're, if you look at your fives, okay? So even your 5-minute candle came right in there. Look at it, the 5-minute candle is very bullish. It might close above here, and we might have a bullish breakout for COMEX, okay? So COMEX is now in 1 more minute. So if this 15-minute candle, came down to the lowest point of the day, grabbed all this, could be like a fake breakout, right? coming back in. If we kind of close like above this red line, remember that's our 15-minute resistance point of interest. Maybe during COMEX we could break right through here, break our trend line, and we got a bullish move coming through here. Okay, so it sucks. We're waiting 10 more minutes on this 15-minute candle. But if you watch your 5, there's your 5. It's going to close in 10 seconds, and COMEX market is going to open. So do we switch to the 5 minutes or do we stay on the 15? Okay, so there's the close. On the 5s, if I was trading the 5s, I would definitely make this red box green right now. Okay, because if it pulls back in there, you could be buying a pullback. Okay, if we're watching the 15, right, it still hasn't closed our 15. We still have 9 more minutes. Okay, so we're trading right back in the consolidated zone, right? We haven't really moved anywhere today. Okay, but let's make a note that we came back down to lowest point of the day and we got a big bullish engulfing candle coming right back up. Okay, so let's let it do its thing right now. If it closes strong, we could buy a nice pullback. So let's let it do its thing, unless you're trading the 5-minute time frame. You're doing your thing over here. We're gonna stay with the 15 today. I know it's something different. We haven't done it in a long time. I don't think I've ever in almost 6 years of streaming here every single day, I don't think I've ever stayed on a 15-minute time frame with you guys the entire session. It's always either 5 minutes or 1 minute. 3 minutes sometimes too. Okay, so this is completely different for me as well, because I got ants in my pants, believe me. I have an adult Depends diaper on and I got ants in my pants right now. But I'm holding off. I'm waiting for the time to expire. It came all the way up, right? And now they're pushing it all the way back down in 8 minutes. So this is now COMEX market volume. This is the commodities exchange. So there was that big bullish 5-minute candle. It opened, ignited, bearish, and coming right back down to retest this zone on the 5 minutes. But us watching the 15-minute candle, we got to continue to watch this thing. So what happens if that's a lower high, they reject it, close back below here, we could open bearish at 830 and start dropping down. Okay, so we're going to watch where that body is going to close. If it closes above here, I'm going to be flipping that red zone green. Maybe I might buy off of that. But if I do, I'm still buying, or if I'm selling in this area, it's still in that consolidated zone. It is technically still trending down. Okay, that's a lower high, lower high. We're still below that trend line. So buyers are there, but they haven't significantly done anything to break any resistance above us. Now we're at the halfway point, 7 minutes to go on this 15-minute candle. Not a good time to trade right now until news finish. Yep, it's not the greatest time to be trading right now. Reminder, guys, we don't have any US red folder news at 8:30. We do have some medium impact Canadian news in 6 minutes. I do not think it's going to really have an impact on gold. But big, right after Wall Street, guys, 10 a.m. Fed Chair Powell speaks. Reminder, he's at the Jackson Hole Symposium. This is day 2. This is when he's actually speaking. That's why it's a high impact day. It's considered to be like an FOMC event. Okay, that's how high impact it is. AYA, you like my analytics style? Thank you. I appreciate that. Not too many people like my analytics style. They just come on here to see a handsome man with really majestic hair. Normally, I'm just eye candy for a lot of you guys, but I appreciate that you guys do like my technicals and my analytics. I do enjoy that. Because I know a lot of you guys are just here to see a good-looking man on here, but I understand, guys. We got to stay focused on the candlesticks. we gotta stay focused on the candlesticks. Okay, so this candle, 5 more minutes, guys. Believe me, I'm shaking over here. Like, I want to take trades. It's not easy for a scalper to sit here and watch this. But 5-minute candles are just dancing around too. They're playing too many games. Came down, big bullish candle. If you didn't do anything, it's coming right back down. 5-minute candles are frustrating as well. Okay, but we're trying to clean it all up by staying on the 15 minutes. Eddie, thank you for joining us. I met Eddie. He's from Eddie. I miss you, bro. When are you gonna come back to Canada? We went out for breakfast. We went out for brunch. Me and Eddie. He's been a sniper from day one. He lives in South America, but he comes visits Canada. Eddie, anytime you're back in Toronto or London, we're gonna go out for brunch again. Okay, so 4 more minutes to go, guys. Then we're going into 8:30. Then maybe we can look for a possible trade. We've gone through COMEX. Look at that, okay? So look at that big rejection on that 15-minute candle. It is just holding this amount of buying volume that bought the lowest point of the day. Are they going to flip this candle and close below there? You know, we're going to still use the red zone as a zone, okay? So all of that big buying, wow, they've absorbed it all and could continue to break down here. It could be an impulse break because we still have 3 minutes and 38 seconds, so it could impulsively break. If you want to watch it on a lower time frame, you can watch your 5-minute candles, see if they break down. Tim Hortons coffee, Eddie. I got my Tims right here. I got my Timmies every day. Medium, regular. I don't drink double doubles anymore. Okay, here we go, guys. Less than 3 minutes. Get ready. If you are going to take a trade, again, look at your spreads. Make sure you got an appropriate lot sizing. Okay, we're not going full port today on a high impact news day. Trade according to your plan, risk. How much money have you made? How many pips have you made this week? Are you going to risk everything all on 1 or 2 trades today? No. Okay. So if you're at daily, weekly goals, don't go throwing that all away today. Okay. You want to go in the weekend on a positive note. Tammy, I need a sponsorship bad from Tim Hortons Coffee. Every time I'm on here, if they're listening, please, 20 Timbits and 2 daily coffees is all we need from sponsorships. We're not sponsored by anybody here. We're our own channel, but sponsors we will welcome from Tim Hortons. Full port or nothing, Nico? Yeah, let's go for it. Some of you guys love full porting. I used to love it too. It's fun. It's exciting when you hit, but you feel like shit when you don't hit. So it's all good. If you want, I'm not your advisor to tell you guys what to do. I'm just here to remind you. Just trade careful. But if you want a full port, it's your account, not mine. But there is high risk, high reward. There's that gambling lifestyle. Okay, guys, 60 seconds. Wow. So it's still holding. It's still holding that little bit of blue volume in it. Let's full port together. No, not this guy. I used to do that back in the day. I've learned my lessons. I don't want to do that anymore. I went through a lot of hard times full porting, guys. It's not a good road. You might see some TikTokers and some Instagram, people doing really well, full porting, showing you that they're making lots of money. Try it. Just try it, you know. Try it with your own money and see what it feels like with your real earned money. Go work for every day for a couple of months and full port that money and see how you feel after that. I know it's easy with prop firms, but back in the day there was no prop firms. Okay, so here we go, guys. This could open like bearish and just start dropping, okay? Because we're closing near the lowest point. But if we are waiting for another retest, again, that red zone, okay? So it opened bearish. So let's see, will it break the lowest point of the day and just kind of come down? Or will it come retest this, then start dropping down? Okay, so it's still inside here, consolidating. Will it come back up to us? So we didn't get that 15-minute closure below there. So, you know, now it could come back up to retest this. Here it comes back up for the retest. Let's see if it goes back down. Okay, so it got rejected right now, came back down a little bit, going back into this. See, that's why sometimes I don't like trading 15-minute candles, because they take a lot of time. You know, if you watch the 5-minute, okay, 5 minutes came down, back up, came down. If this kind of 5-minute candle maybe closes above here, you got a double bottom, then you could go in with that buy. However, if it continues to stay down here, then close below here, that 15-minute candle might be that one that's going to start to sell off right at this lowest point of the day. So it got rejected there. Again, that 15-minute candle could be a shooting star candle ready to break the low of the day and drop. So get ready, guys. We've already retested here. We kind of came back up there, so now it's coming down. So, and it's early in the candle with 13 minutes to go. So it's got a lot of time for it to continue to push down if we start to break here. So, you know, bear sentiment might be intact. Okay, so we gotta kind of break through here. We could watch, what I also do is maybe watch that 5-minute candle to kind of dissect it and break it down. Watch that 3-minute close there. But if you want to trade with the momentum of that 15-minute candle, I'm gonna go in a sell. I'm just gonna sell this 15-minute shooting star candle coming down. It kind of came all the way back up there. It got rejected. It came in, it retested the red box. So I'm going into a sell right now. I know that there's no closing volume yet below there, but it could be one of those intuitional trades with intuition, okay? So there's the drop, okay, from this point. That's 25 pips. So you can scalp a 15-minute candle if you like to. My stop loss I'm going to place above that previous high up there because it's a 15-minute. And let's see if we can come down to our daily trend line, that yellow line. Okay, but if anything below the purple line, guys, right there, you see right there, I'm going to draw a little line right there. That's where we had a dip in the market and come back up. So, guys, we could target that red line, would be about 40 pips. Yeah, we can scale out a little bit prior to this candle closing. Guys, okay, here we come down. You know, we should be grabbing a few pips here, okay? Because it could definitely find some support and come back up. Okay, but there, that's 40 pips. Wow. Okay, I'm taking out 50%. I'm going to take out half. Normally I take out 80%. I'm going to take out 50% right there. At that red line, exactly. Where did I get that red line from? Right over here, looking to the left of my chart. Okay, so that was a 40 pip drop. I closed out 50%. If I want to reduce all risk, I can go right there in that red zone. I can go to a break even. I'm going to play safe today because there's a lot of high impact news. I'm going to go to a break even with the remaining 50%. Okay? So do you guys see how we followed that 15-minute volume and we got a clean 40 pip drop? If you were still watching that 5-minute candle, you had to go with impulse, right? If you're still waiting for that 5-minute candle to close, still one more minute. That's why sometimes, guys, someone always tells me, Ron, sometimes you go in a trade without it closing. It's all, but guys, we watched this thing, this entire call. We watched this, how it closed down. That was that big bullish candle coming up at Comex. They rejected it back down. We retested. That's why I went in the impulse, was it retested that, and as soon as it broke, that's when it got redistributed. All the sellers redistributed all of that volume right exactly to that red line where I see a wick, I see a body and a body. That's why I placed it right there. So it came down exactly where I wanted it to go. I like 40 pips. I closed out 50% and I have the rest remaining with break even, okay? But today is kind of like an educational class as well with some trading. So hit the likes on YouTube, subscribe to the channel if you like this type of education. Was that too fast for you guys? No, did Powell already speak? No, Powell speaks at 10 a.m. in another 90 minutes. Any questions on that? Okay, hopefully I explained it properly. We're going a little slower today, like we're on the 15 minutes. You know, we're not going on the fives, like, but the 5 minute now, the first 5 minute volume closed below. So, you know, it could come back to retest. It could also come back up on us, okay? Still running this 15 minute volume, see if it will continue to push down. $40 pips is a not bad scalp intraday trade, okay? 40 pips, not bad. I would have loved if it was a 400 pip drop, but that's not how markets work. Unless there's some type of high impact crazy news, 40, 50 pips is good trade. With how much drawdown did we incur? Nothing. I always look at also the drawdown. Worst case scenario is my remaining 50% will get stopped out, okay? Mix, you're welcome. But if we're going to continue to watch the 15-minute volume, okay, so there's my break even now. So my 50% got stopped out. That doesn't mean that's it. You know, I'm packed up. I'm done for trading. What I got to watch now is, will this 15-minute volume that's going to close in 8 more minutes continue to close below this low of the day? Then maybe if it comes back up, I could continue selling with the market, okay? I know I had a quick break-even stop loss. Some of you guys still have your stop loss maybe above there. Some of you guys are maybe reduced it to this red zone. That's fine. You know, if you did that too, that's reducing your risk, okay? But that was technically an impulse break candle. That's why when it came down, I collected 40 pips. I took out 50% today. Normally I take out 80%, but this candle still hasn't officially closed. So it's still an impulse break. That's why I went to break even, because this could flip and come right back up. So no volume has confirmed closure below this purple line as of yet. Maybe this might be the candle in 7 minutes. Maybe it will close back up bullish above here, okay? So I told you guys, that was an impulse break, impulse sell, pip and dip, and protect your capital, okay? So let's please learn from that. Yes, I would have loved if it continued to drop, but that's not always the situations in trading, okay? Okay, and sometimes this happens. It comes back up to where you initially entered. That's why if you give it a little bit of breathing room, you could still be in the trade, okay? Guys, I'm educating here. I'm an educator as well. And I know some of you guys are joking about full porting, but that does affect me, guys. You know, like when I do take trades, I don't know whether you guys are managing your risk or you guys are doing silly shit. So it does affect me, because sometimes when I take a sell and then it comes back and hits, someone says, oh, I blew my account. You know, I know it shouldn't affect me. I know it shouldn't care, because we're all adults here and we should be mature. But it does affect the way how I trade here live, you know, so I am always still considering you guys when I trade. So, you know, like I sometimes I give up profit as well, because I know some of you guys are listening to what I'm doing. So guys, I can't have that on my conscience. Sorry, I'm an honest person and it does affect me. I know some of you guys are just joking around. I understand that, but some traders are not joking around. And then when they get hit, they say, oh shit, why did you tell me to sell? Again, I'm not a financial advisor. I'm not your advisor. I'm here to just help educate, guys. So when I take money out or I go to a break even, my conscience is clear. After that, whatever you guys are doing, it's on you. I can only do so much here. Some of you guys, don't go to break even as fast as me. That's fine. I know some of you guys in the Zoom, you guys message me and say, Ron, I'm still holding this. That's perfect, okay? No problems. It's just the way how I educate here. Sometimes when I'm trading by myself, I trade completely different. If I go on the Zoom with the Zoom guys and I'm not on YouTube, I'll show you, I trade a different style, okay? But this candle is still technically an impulse with the volume. We'll figure out where it closes in the next 4 minutes. So, that was an impulse trade. That was also why I took out money and protected my capital. Because sometimes when I trade, you guys see when I trade the impulse 5-minute candles, it goes down and it comes right back up and it comes up on an impulse and then I get stopped out. So, that was an impulse trade. That's how I trade impulse candles. I pip and dip, I take some money out and I take my stop loss to break even. Maybe this candle will be the first one that closes with volume below, will give us a better confirmation. Okay, but we're still technically on the 15-minute candles, making that lower low. That was a lower high, lower low, lower highs, new lower low, and we might get volume coming back down, okay? So you can see who won so far out of that accumulation. The sellers won so far. Remember when we started the call, I said it's going to move either, continue to trade in that zone and accumulate, or it's going to maybe physically close bullish above there and start to move up to there. What was our only other option? Was closing below there, retesting this, and dropping down. Okay, so we got that now, but we might get now 15-minute volume that's closing below our purple line. That was our tweezer bottom lows on the daily, and now we broke them. Okay, so it was a 40 pip drop. The 5-minute shows how the 15 is building. Yeah. Yep. Shows, yeah, there was the move come up. There was even a 5-minute trader, there was your volume that closed below. Here was that retest. Could have sold right there as well. Came back down, came up. You got a spin top candle and consolidating here, okay? But more importantly, this 15-minute candle is going to close in just, 2.5 more minutes. Did any of you guys get, hopefully maybe some of you guys didn't come to a break even as quickly as I did. Is anyone still holding the sell? Because if we can get that volume closing below here, maybe if we can come, bid down here, maybe we're closing it low, we might continue to push down to that daily yellow trend line down here. Rob, you're still in? Good, good. Let's see where it moves. Armandi, still in? Bravo. Okay. Okay, you see how it's still pushing down? So sellers are bidding on it, like they're bidding down in here. It's perfect. Randy, you're still holding? Perfect, perfect. Good job, okay? Let's follow now the close of the volume. We got about 90 seconds to go, okay? We're coming back down to the lowest point that we did hit. And remember, it came all the way back up, kind of came into here. I kind of got stopped out at my break even, but then the volume continued to come back in. Okay, let's see how it will close. This still could be retested. So continue with that zone 2. We're moving away from this one. So we are diverging away. We're still in this descending motion with possible volume closing below here. Okay, Okay, but let's see if they close it. Remember, this is an important purple line. That was our, like, look what we wrote here earlier when we were doing our top-down analysis. That was the low of the day, but it was also a tweezer bottom equal low. So it was a very important equal lows. So we kind of just broke right through that. It's coming back up. There's always going to be, anytime you make new lower lows, there's always going to be like buyers coming in because they're pending and they're waiting to get discount buys. So, but what you got to do is continue to bring the volume down. You know, there's a saying, wicks do the damage, bodies, like when they close, show the evidence. So like wicks do the damage coming down here, but the body will tell the complete story where it closes, right? So, you know, that's a good saying in trading. Wicks do the damage, the body tells the story. So the wick came all the way down there and did some damage, but this body will show us the story. So it didn't close right near the lowest point down there or relative near the low. It closed with a little bit of maybe 50% of the entire range of the candle is now bearish volume. It did just open bullish and come back up. Okay, so this purple line momentarily was support, but now that volume that just closed below, now it could be momentarily resistance. Again, it's just a line, right? It could come back into this zone over here. However, if it continues to stay below here, maybe sellers can continue to fill that wick to continue to drop. But let's measure the distance that it needs to continue to fill to get down there. So we got to drop another approximately 30 pips to fill that wick, and then maybe break. So it could be a continuation of 45 to 50 pips continuation. But it's not like it's a short wick. Like right there, that's a short wick. If we had a short wick and we open like this, we could have popped that wick and started to drive. We still have to continue to fill that big wick and drop further, which could happen. But, you know, as it comes down, remember, buyers are coming in the market, okay? So we are still technically below here, hasn't really retested the purple line as of yet or retested this zone. But this is where sometimes where the markets rotate, like where you get closing volume below a low of the day and then buyers step back in, because there's got to be a lot of buyers that want to buy just below the lowest point of the day. So this is where it could get, you know, tricky to see, because there could be buyers coming in or sellers continue to push this thing down. Okay, so what we could wait for is maybe another retest of this red zone or maybe of this purple line. We'll stick with this for just a little bit, and then what we'll do is we've already done US30. Okay, so US30, you see how nicely it's consolidating in here. These are the 15-minute candles, came up to the highest point of the day. It came back down to this supporting pivot. It came back up. Did it tap into the highest point of the day? No, I see like pretty much, you know, they're not technical equal highs, but we got a high and a lower high, and pushing back down, closing below. So you see we're building a pattern going into Wall Street. Up at the highest point of the day, coming back down. There's our neckline. Coming back up, now maybe possibly coming back down. There's that M pattern. So if we break below there, maybe close below there, maybe retest this, we could be dropping back down into that 4-hour block. Remember, we did our analysis that I have a buy signal waiting right there at the white line. There's that 200 EMA and 50% of that 4-hour block. It could definitely come down in there. So maybe we could sell into that block, or we see if it will come in there, we could buy out of this block. However, if it just continues to build back up, maybe we could be breaking out of a daily high and continue to drive bullish. So right now our 15-minute volume on US30 is still consolidating in here. It's great for trading. Like it moved up, moved down, move up, move down, but now it's kind of barcoding. Bullish, bearish, bullish. So we got some accumulation going on NASDAQ, you know, US30. I think these are waiting for Wall Street market open, but more importantly, Powell speaking at 10 a.m. Okay. So guys, I'll stick around with gold for a couple more minutes, then we'll do a nice analysis on NASDAQ. We'll get everything ready. I'm gonna take just a quick 5-minute break after we do NASDAQ. I gotta, go grab another coffee, go to the washroom, and get ready for Wall Street, because we're gonna go a little longer than 10 a.m. Okay, we're gonna stick around for Powell maybe till about 10:30. So we started at 6 this morning, so we're already going over 3 hours. So this call is gonna be about 4.5, maybe 5 hours long. Okay, so make sure you guys have drinks ready. Make sure you guys are have a coffee, because it's going to get really crazy when Powell starts speaking. If any of you guys have a live link that we want to listen to, send it to me, and I can open it up at like 9:50, 9:55. Maybe we can listen to Powell while he's speaking. If there is a live link, sometimes there is a live link of the day 2 of the Jackson Hole, but sometimes it's closed for press and we can't really see it or hear it. But sometimes some of you guys find the links. Okay, so you see now it's coming right back up bullish. Are we going to retest this red zone? Will it come back and trade in the consolidated area? If sellers are here, they're gonna kind of absorb these buyers and maybe continue to push it down. Okay, so we got to find lower highs, and continue maybe to push the volume below here. Maybe get that bearish flag, continuing to sell back down below here. Crown and Cronos, do I analyze Bitcoin charts the same way you do these? Everything, whatever I'm trading, same way. Top down analysis, daily, 4 hour, hourly, 15-minute, 5-minute. Doesn't matter if I'm looking at gold, crude oil, NASDAQ, S&P, Dow Jones, Bitcoin, Ethereum, Apple, Tesla, Amazon. It doesn't matter. Okay, it's all looking for structure. Doing a top-down analysis, doesn't matter what the security is. Okay. Do you see why? Good. You hooked up 30 pips, closing 2% on your prop account this week. Amazing. Excellent. Do you see why? That's a great week. Wrap it up. Stick around if you want to watch what's going to be said on the news, how Wall Street market will open, going into do some analysis over the weekend and get ready for next week. But congratulations, brother. That's amazing. 2% on your prop account in 1 week. Amazing. That's a good week. Like when you're right around 0.5% per day. That's excellent. Great compounding. Hustle Hub, should we enter short when Powell starts speaking? I wouldn't recommend that. I would maybe listen to what he's saying, not just go short when he opens his mouth, unless you have an indication why. I wouldn't recommend that, okay? I wouldn't gamble when he's speaking. Okay, guys. So I don't want to just stick with gold all day. We were watching gold from, we started the call at 6 a.m. We watched all of this. We got a little bit of a quick little short sell, but nothing really crazy. It's still kind of, accumulating right now near this lowest point of the day. We'll revisit. We'll come back to gold. If you guys are trading this, just trade smart. Again, wait for confirmations. Do your time trades. See how 15-minute candles show a different picture than 5 minutes. But you got to be patient with these. If you're waiting for bodies to close, I know it's tough. You got to wait 15 minutes, 10 minutes. Again, you're waiting 7 minutes for this. So that's why some traders choose to go lower time frames. But it's not necessarily always a better thing to go lower. It's always the best thing to stay higher, because you see a better picture, and it kind of cleans up a lot of like the 5-minute candles when they start trading like this with a lot of inconsistency. It kind of cleans it up on a 15-minute candle. Okay, so let's move over now to US30 and NASDAQ. We already did our analysis on US30. Okay, so we've got some zones. We have a high and low of the day. We have our 4-hour point of control zone. This is our daily bar indicator where what opened right here. It was bearish. That's where we got that drop right down there. Made the lowest point of the day, came back to opening price. We hit the top almost 2 times now, and it pushed down, but it's still building. So we could get that breakout, right? And this big red zone is the all-time high supply zone. Just so everybody knows that, what this red zone is, okay? So it is building strong today. We'll see if we can continue to squeeze through here. Let's do now NASDAQ, okay? So we're going to do NASDAQ, a top down. We're going to start off on the daily. And once we're done this, we're going to take a quick little break, go to washrooms, grab some drinks, and we'll come back, get ready for Wall Street and Powell at 10 a.m. Okay, so some key structural areas, you know, like just look what's easy on the eyes, what's visual. I can see it come up, go back down. I can see it come up here, go back down, come into this red zone and go back down. So these were previous all-time highs for NASDAQ. So if I continue with this same zone and I bring it into the future, now there's volume closing above this. So it's no longer a red zone. It's got to be some sort of supporting zone below us. So it's green now, okay? Do we have any zone above us so far that we have? I can maybe see, I can go to our all-time high and bring it down to the bodies right there and drive it red into the future. So that was our new all-time high. We can mark that all-time high wick with the Donald Trump orange line right here, 23,985. We can see exactly we hit it on August 13th. Okay, and you can see that that is an area of resistance. We came up there and look at now, these are multiple daily candles. So you got 1, 2, 3, 4, 5, 6, 7. Today's the 8-day trading, and it's been making lower lows, lower highs, lower lows, lower highs, lower lows since we hit that all-time high. Okay, it's not a market crash. Some people are saying that the market is crashing. It's not a market crash. It's a market pullback from an all-time high. Okay, it's done that quite a bit. Like here where the market was moving up, it came for a weekly push down, and then what were the results? It continued to make higher highs and higher lows. You know, like here was a big bearish 2 days. That's not a market crash. It was a correction, pullback, and the buyers gobbled it right back up and took it to the new all-time high. So we are pushing back down. Technically not a market crash. Still got higher lows support. We're still above demand levels. So how is it a market crash? It's not, okay? It's a correction, okay? There's nothing wrong. Markets need to correct to get new buyers, to get new volume, to continue to trend in an upwards direction, okay? But the question is, where are we going to find the support? Okay, so far I can see it came down on Wednesday, went back up. It came down yesterday, closed right there. Today we came down and it's going back up. So are we finding some support around this structure? Maybe. So we have another key critical point of interest right here, I would say. This is where I place a yellow line. Okay, why in here? I've got that body from these two big bearish candles. Look at where it stopped right there. And then that's where that big bullish engulfing candle started right at this red line. So we got good support at 22,750 on the daily for NASDAQ. Okay. And now we're building some wicks above it. So it is higher lows. Another key area is on this pullback day right there. You know, when you're trapping volume, like if I was to trap all of those 4 bars, that's where I would trap them. Why? Because look, you got a bearish candle, you got a bullish candle, you got a bearish candle, you got a bullish candle. If you got to consolidate those 4 bars, right there would be my consolidation. So if I stretch it into the future, I can see that yesterday we traded right in there and closed right there. The day before, Wednesday we came in there and back up. Yesterday we traded in here, closed in here. Today we came back down. We might be accumulating to get ourselves back above here. This could be building like sort of like a double bottom in some way. Like if you consider this to be the bottom, not all the way down to the yellow line, like right here. There's our top, there's our neckline, the all-time high, and then we're pulling right back in. This technically could be like a second bottom where it could come back up. Are we going to have this type of move? unless there's some serious news, unless Powell says something. If he hints rate cuts, we could see a bullish move. Okay, rate cuts would cause the markets to go bullish. Stock markets, like for example NASDAQ, US30, S&P 500 would cause, and look at the way how it's building its second leg, maybe anticipating if Powell can hint something in today's speech about rate cuts, and then we might see some bullish. Is it going to come all the way to the all-time high and break? We got resistance behind us. What about these 2 weeks where it was dropping? So, points of interest, where could we go? Definitely maybe want to retest this point right here. Yellow line right there. There's where a body closed, where a body opened. 23,400. If we continue to go back up, I would target, 50% of this bearish candle right there. 23,575. If it continues, right here, we've got 3 bodies where a body closed, a body opened and closed right there, and a body opened right there before we head into the red box. So you can see it's got to break through this yellow line, got to get through that yellow line, got to get through that yellow line before we can come all the way back up to our all-time high supply. So there is resistance above us, okay? But we got to get, like, if you're following a daily candle going into next week, can we get some daily blue volume closing above here so that we can build into next week and maybe come through here? But we also have lower high, lower high, lower highs, where sellers are pushing it down. So if Powell hints no rate cuts in September due to inflation and tariffs and all his speech and all his BS, then markets might tumble and continue to sell off, okay? So that's what we got to watch for. And then in this key zone, what I'm looking for is points of interest today. Can we just get back up to right here? That's it. Like here's another point of interest right there at those bodies. Okay. So I'll get rid of this consolidated zone now. And then what we'll do is we'll focus on today's and yesterday's candle. So yesterday was opened right here, was initially bullish. We're still below 50% of this candle, lower high, pushed down, came all the way down. But did we take out, yesterday's low? No, it came back up, closed with a little bit of bearish volume. Then today, where did we close and where did we open? We closed yesterday, we opened right here. Today was initially bearish, where it was bearish, bearish, bearish. It took out yesterday's low, okay? And we have a new low built today, right now, established at 23,013. It is technically above Wednesday's low. It's above this structure here. It's above here. So if you kind of want to draw a trend line coming up, you can see we are slowly ascending, but we've got a lot of pressure pushing down with sellers, okay? So when we hit the lowest point of the day, it is holding. It came back up with buyers back to the opening position. They technically flipped the candle into a hammer. That's how we hit our highest point right there, 23,215, and we're struggling to break above here. It's getting some resistance. So today so far, with 7 hours and 42 minutes to go, we are at a bullish pin bar candle. With good news with Wall Street and good news by Powell, maybe we can continue to force our way through here and drive up to these yellow lines, okay? However, it is a lower high. If it wants to come down, it could come back down to the opening price and turn bearish and start filling these yesterday's wick and today's wick, okay? But we do have some rejections last 3 days. So the market is building, but we're not closing strong, okay? So that's what we got on the daily. For excuse me, NASDAQ. Now what I do is I kind of break it down to the 4 hour. 4 hour more specifically, we can see what happened in Europe coming from 2 to 6 a.m. So 4 hours you can see are selling off. Lower lows, and then it pulled back, lower high, and then it came back down. Look at when they pinned it, this nice, beautiful, bullish hammer candle on the 4 hour. So it broke, it came all the way down. That's what created the lowest point of the day. This is 2 to 6 a.m. So this is pre-London. This includes London and Frankfurt and the Swiss market opens. Everything that goes on in Europe from 2 to 6 a.m. Basically the European bloc is this 4 hour candle. And Europe, it came back up to the opening position, closed right near the high. We did have an ignited open, fill that wick and pop, but it didn't really pop and break out further, okay? Just came up to there and then they rejected it back down. So this 4-hour candle is closing in 56 minutes, and you can see it hasn't really moved anywhere, just typically consolidating in here. Do we have good hourly support in the market? Let's draw like a zone right here. Let's trap that volume right there, okay? Let's just make it green. See, when it came down, close right there. Yes, it did break all the way down there, close back above, and then look, we traded into the green zone and back up, so it's still holding. Here, we closed right in it, impulse break, come back up, close inside it. We were kind of consolidating in here. Again, London came all the way down, made our low of the day, came back up, closed above here. So you see how I have that as a green zone going forward, okay? If we continue to trade in here, maybe this might be an accumulation area where buyers are buying. If we close below here, close below, we might flip it red and then it might fill back down and sell off. Okay, so that's a block in the market that we got to acknowledge. You know, it could be the start of like a double bottom being built. That's the one bottom. There's the neckline. This could be the second bottom that's starting to really build, but Powell is the one that could really push this thing through if he just hints anything to do with a rate cut, or we're looking at rate cuts. Anything, just with the tone. Dovish, they call it, not hawkish. Okay, dovish. Any dovish terminology could cause the markets to continue to go up. But if he's hawkish and he's firm on not cutting, on pausing, we need to wait and see this and that, then the market doesn't like that. It'll maybe sell off. Okay, then we continue pushing down. So, you know, today will be dictated by Powell at 10 a.m. I don't think it will be dictated by Wall Street. Wall Street will make a move. It will grab pending orders up and down. It could be volatile, but the market is waiting for Powell. Okay, so that's what's going on the 4-hour. If we go into the 1 hour, 1 hour is doing nothing right now. Okay, we're kind of like just came up, back down, coming back up. So it's consolidating. You know, if you were to trap the 1 hour volume, like I would box it in right there. Again, are we moving anywhere? Are we doing anything? It's just right in here. How many hours has it been trading in here? Since 5. 1 hour, 2 hour, 3 hour, 4 hour. This is the 5th hour. We're just continuing to just trade in here. Is it going to be a bull flag that could be flagging in here to break out? Possibly. You know, it could be a great breakout to the upside, or it could dump right back down into here. Okay, but it is building. You know, it's already built its double bottom on the hourly where it came down. There's the neckline. There's our second bottom starting from London. There it is. So we came back up. We're at our neckline. It is a bull flag. Bull flag consolidating. Bull flag has a high probability of continuing to break out to the upside if we get good news from Powell. Yes, but it could also be a fake breakout. Wall Street could break it out here. Powell comes in. He's very hawkish. Comes back down. Does this, and then the market dumps. Right? That could be a possibility. Also, guys, if you're not trading today or you're just analyzing over the weekend and things like that, this could shape up how we move next week. Okay, so it's a very, very important day, whether you're trading or not. Okay, and then just some levels above us, you know, like our hourly, look right here. Those were 3 triple top highs up there where it came up right up to there, back down. It came exactly right there, back down. Came up a third time, exactly right there, and caused that move coming down. So if we're driving today and we drive through this yellow line, that's where 23,300, we got to be watching that. You know, if we go up there and we make a couple hundred pips, we got to watch that zone up there. Okay, so that's what's shaping up on the hour. Okay, if we look at the 15 minutes, again, 15 minutes are not doing anything special. We had a nice big move right here at 230, 245. There's London, big V recovery, consolidated bull flag on the 15 minutes. You could have bought just London market open, made some money, came back up, pushed down, back up, come down, go up, back down, going back up. It is accumulating. Holy. So we can stretch this accumulation zone right to the highest point of the day, and you see how it's just waiting for Powell to make a move. Okay. So if we watch more on the 5 minutes, we'll stick with the 5s when we watch. Do you want me to stay with the 15 minutes today? We've been doing it with gold. Do you want me to stay with the indices on the 15s? Okay, if you guys want, no problem. Okay, there's our SST daily bar indicator, reminder of opening price. Came all the way down to lowest price. That was during pre-London. Got a good London market volume come bring us back up to the opening price. We tested the high. We got this bullish pin bar turning into a hammer candle on the daily that could technically break out of here. Okay, so that's our daily bar indicator right there. We'll add our 9 EMA. Our 9 EMA is right at these 15-minute bodies. Our 200 EMA is right above the highest point of the day, right up here, okay? Do you guys want? Yeah. Rob, less noise on the 15-minute. Randy, 15 minutes cleaner. Jay, I love watching people. Let's try it. Let's do today something different on the 15-minute candles. I'll flip-flop to the 5s, but we'll maybe put focus on the 15s, okay? And then we see how it is. If you guys like this or don't like it, you tell me, and next week we can change it up. No problem. Let's just try something different today, okay? So we've got US30 over here. Guys, I'm just going to let us know that we are trading in an all-time high supply zone, but I'm going to get rid of this right now just so, you know, it doesn't confuse us, okay? So we got to know on the daily we're trading in the all-time high supply up here. 15 minutes are consolidating nicely. So if we box in, you know, make our sniper trap and gap, they are consolidating nicely. They are coiling up. They will break out eventually to the upside or to the downside. This is a 4-hour zone. Also with NASDAQ, this is a 4-hour zone. You know, I could do exactly a 50% marker, white line right in there, okay? So they look pretty identical. When you ask me, I see US30 dropped at the same time, 230. London picked it up and we're consolidating. Same thing with NASDAQ. It dropped at 230. London picked it up and we're consolidating. So right now they look technically identical. They are not identical indices, but right now they are trading pretty identical. If we look at gold, okay, so gold broke down. It's coming back up. It's making a double bottom. So if you're watching gold on the 15s, okay, it is continuing to build. What I would be watching if I was trading gold, I would be watching, where's my pathway? Where's my pathway? What just happened to it? Did I just delete it? Oh, there it is. Okay, so if it closes above here, maybe flip this one green, maybe retest this. It could be breaking out of that trend line and going bullish now, okay? So you see it broke the lowest point of the day. That's all it got down to. It's still holding. It's building. There's a little structure on these 15-minute bodies right there. Came back up, double bottom. It's either going to impulsively break out of here. Maybe look for closing volume for confirmation. Maybe flip your red zone green. Maybe we'll still stay red and come back down. But that's gold right now, okay? So gold is still inside this. But we'll focus here. It's almost 9:15. We're going to focus on our indices going into Wall Street. Quick reminder to everybody, okay? Forex Factory, right over here. We have Wall Street market open, and here, Fed Chair Powell speaks. High impact. He's due to speak about the economic outlook and monetary policy framework at the Jackson Hole Economic Policy Symposium in Wyoming. If you guys don't know who he is, he's our Federal Reserve Chair, Jerome Powell. He is having a little, you know, tit for tat with Mr. Trump. Mr. Trump is asking him, you know, to drop these rates, which would be a good thing for American citizens to have some relief on maybe mortgage payments, on maybe line of credit payments, on credit card payments. I understand. I would love if my country too reduced the interest rates. But Powell doesn't just, you know, look at what he does what's best for the entire economy. He takes a lot of things into effect. The labor market, he takes into effect inflation. He takes into effect how tariffs will cause things in the market. So he looks at several things over here. But it's not just him, it's a committee, okay? There's 12 of them. He is just the head chairperson, okay? So why do we care? As head of the central bank, which controls short-term interest rates, he has more influence over the nation's currency value than any other person, okay? So Powell is the man. He is the man in control. Traders scrutinize his public engagements as they are often used to drop subtle clues regarding future monetary policy. And he's meeting at a 3-day event that's held once per year in the last week of August at the what is called this Jackson Hole. So if you want to know what Jackson Hole is, today's day 2. Tomorrow is day 3 on a Saturday. When you're enjoying your weekend, there's actually day 3. So this is what it is. The Economic Policy Symposium held in Jackson Hole, Wyoming is attended by central bankers, finance ministers, academics, and financial market participants from around the world. This is not just in the US. There's participants from around the world, like high officials who are in finance, economists, everything. So this can affect the entire world. Okay, so it's a big event. The meetings are closed to the press, but officials usually talk with reporters throughout the day. Comments and speeches from central bankers and other influential officials can create significant market volatility. Okay, so please, guys, trade careful when they're releasing this news at 10 a.m. because it's not just like numbers coming out. It's actual Powell is speaking. Okay, you can listen in if there is a live link available to this. You can listen in while you're watching the markets. Okay, so that's happening today. So just a reminder, and it's a Friday, so please be careful. Okay, a lot of you guys have hit maybe your weekly goals. I would not suggest continuing to trade with this type of high impact news because you may make a mistake and you might regret it over the weekend. So it's you got to think of your game plan right now. Okay, earnings wise, nothing going on earnings wise today. Okay. So guys, if we can hit the likes, amazing. Let's get it to 775. 775. Can I get a 775? 775. Going once, going twice. Let's get these psychological numbers. 775. Then maybe we can hit 82,800, guys. Thank you guys so much for this. We appreciate you guys. 300 viewers. Hopefully you guys can like if you're getting value from SST. Subscribe to the channel. Join us on a daily basis. Hustle Hub, you'll boost us. Amazing, bro. I appreciate that, man. Thank you so much. I don't know what that means, but I appreciate it. Okay, I'm not big into knowing like all of the terms for streaming and things like that, but a boost is excellent. I appreciate it. I'll help him boost us up today as well. Anita, you're welcome. No problem. Randy, Jerome is in control. I agree with you. I agree. Jerome is in control. Trump thinks he's in control, but at the end of the day, Powell is the man regarding finance at the Federal Reserve. Trump wants to fire him because he's not going along with Trump's narrative. So if Trump puts in Haskett, oh my God, okay? I'm telling you, this guy's a puppet. This guy's a pure puppet, okay? He doesn't care what's happening to the average person. He'll sit there with that smug smile on his face, lie to you in your face, and tell you America's doing great when, a lot of people are suffering. He's one of those people. He's one of those guys that has that look on his face that you just want to, I don't want to say it here, but he's got one of those looks on his face where you just kind of want to, I won't finish off the sentence. But that's who Trump wants to appoint as the new federal chair. And this guy is horrible. My daughter's going into grade 4, and she knows more about economics than him. I'm sorry to say that. So please, Papa Powell, do us a favor. Do us all a favor here and just hint that you're going to cut these rates in September. What color tie? Ooh, Tony, this is a tough one because I follow him on his FOMCs, what tie color he wears. Today's a difficult one because he's at the symposium. Man, because he's in front of the world here. He's not just in front of America. So this is a big one. Randy, Howard Lutnick is a greasy slime ball. You said it, not me, about Lutnick. Letnick. We call him Nutlick. Yeah, he is a greasy slime ball. You said it, not me. For the record. For the record. Yeah, I agree with you. These politicians, some of them will lie with a smile on your face while you're struggling and just tell you everything is good when you know there's unemployment. We saw the weekly unemployment numbers. You might know in your neighborhood, in your town, in your city, jobs might be closing, you know. So that's telling you the real economy is right there. A lot of people think the stock market is trading at all-time highs. That reflects the economy. The stock market is not the economy. The stock market is like the stock market, okay? It's completely different from your local economy. The stock market is traditionally where the rich and wealthy get richer and more wealthier. The average person working a 9 to 5 is not in the stock market. They maybe are with their pension plan that they're working their 30 years, 35 years of their life to get that pension. But a lot of people, the average day person is not trading the markets how we do, are not engaged in them. If the markets are at all-time highs, it doesn't really affect them. You know, when their grocery bills are going up, the cost of fuel is going up, their hydro bill is going up, their rent is going up. They're like, what does it matter that the stock markets are all-time highs for them? So, you know, that's where they kind of get you. They trick you. Oh, well, the stock markets are all-time highs. We're doing great. Yeah, the rich are doing fantastic, but the average citizen is not. Not everyone has invested in the Magnificent Seven. Not everyone has a 401k. Not everyone has mutual funds. A lot of people are working paycheck to paycheck. You know what I mean? Just trying to get by day. I don't think they're concerned with what the stock market is doing. But you guys are learning all about the stock market. You're learning all about the financials. So you're getting the best of both worlds. So shout out to everybody learning while you're working, while you're managing your day-to-day life and you're earning an extra income on the side. I salute you guys. I congratulate you guys. You got my respect. Continue at it. It's not easy. Coming from me personally, this shit's not easy. I wanted to give up a long time ago. I was struggling a lot myself, but I didn't give up. I knew I would figure it out at some point. And same with you. If you're struggling, just let you know you will figure it out. Okay, you will. It takes time. It's not an overnight thing. This is not easy to do. Because it's not just, technicals. There's a lot that goes into trading. You got to learn about the fundamentals. Right now, we're talking about Powell. That has nothing to do with candlesticks. Powell is more, and those are the economics. Those are more the fundamentals of trading. The news is fundamentals. Learning technicals right now. We see a bullish 15-minute candle breaking out a new daily high prior to Wall Street market open in 8 minutes. So these are technicals. Fundamentals. You got to learn about the psychology of the markets, right? The markets move on psychology. I tell you all the time about the psychological numbers. You got to learn the psychology. You got to also learn about risk management, right? A lot of us struggle learning risk management. Some of you guys want a full port on Powell's news. Good luck doing it, Some of you guys want a full port or go all in on NFPs, on FOMCs, on CPI news, on Wall Street market opens. That's fine, but that's more gambling. You're not trading, you're gambling. So that's what you got to battle yourself. Do you want to be a gambler in the markets, or do you want to be an actual trader following confirmations, following high probable setups, those things? So there's a lot to take in. And then just overall, just dealing with the emotions of trading. Some days you're going to have amazing days. You're going to think you're the top of the world. You're going to become the next biggest trader in the world. And you're already picking the color of your Lamborghini. And then the next week, you throw everything back in the markets, and then you're saying, why am I doing this? What did I just do? So you're going to go through those cycles. You're going to go through those every week, every month, every year. Doesn't matter how much experience you have. Every trader goes through that. I go through that myself. Everyone has slumps. You're going to have a slump. I watch sports. I watch some of the greatest basketball players ever, the greatest football players, the greatest tennis players, the greatest golf players, anything in sports. You'll see one of your favorite athletes who's a professional getting paid a lot of money to just play basketball. They go through slumps. I grew up watching Michael Jordan and Kobe Bryant, two of the greatest ever to ever play basketball. And I saw Michael Jordan go through a slump. I witnessed the game. I was at United Center, watch him go 8 for 30. It's unheard of, Michael Jordan, to watch him. And then he struggled. And next game he came back and he just killed it. So, everyone goes through this. Everyone goes through this. It's normal. It's normal. But it's how you react and how you recover is what shows character. So you're going to have bad days in the market. Don't get rattled. Don't revenge trade. Anytime you're thinking of revenge trading or pumping up your lot size, walk away. Walk away, guys. This is a good pep talk for everybody. Have hobbies. That's why I tell you guys, I'm renovating my entire home right now, because it keeps me away from the charts. When I hit a daily goal or if I get stopped out, I go do other things. I go fishing. I go play sports. I go to the gym. I go renovate the home. I go for a walk. Whatever it is. I take the kids to the movies. I just want to get away from the charts as much as I can because I know what they can do. They can cause me to come in here and start revenge trading, getting mad at the markets. Maybe I'm not reading it. And then the market knows how to play psychology with us. We're retail traders. That's how these brokers and prop firms and shit like that all get our money, is because they know how we trade on emotions. They have bots that are designed to trade on emotions the way how we trade. Losing is not easy for most people. It's not. Trading is not easy. That's why I don't like mentors that say that trading is easy. It's not. Trading is one of the most difficult things to do. There's no guaranteed payday doing this. I can go to work every day, work a 9-to-5 job, and I get guaranteed money. I get a paycheck every week. That's guaranteed. Trading is not guaranteed. I can sit at this table for 3, 4, 5 hours a day and maybe not make anything this week. Welcome to the world of trading. That's why it's difficult. If traders say that they can guarantee money every single day, I call BS on that. Okay, guys, so let's get ready. We're 3 minutes and 40 seconds away from market open. Okay, so just a reminder, 30 more minutes. I'm more concerned with what's happening at 10 a.m. Market open is very important too, but 10 a.m. is going to be fireworks. Okay, that's going to be Powell speaking. So, have some rules. Are you going to be in a trade prior to Powell speaking? Are you going to wait for Wall Street, see its moves, see what Powell does, trade after? There's nothing wrong with trading at 10:30, 11 a.m. Eastern today. Later on, post New York, once everything settles down, Wall Street market opens, makes its move, Powell has his speech, everything is cooled down. You might find better trading later this afternoon, okay? We're going to go through a lot of volatility right now. There could be some setups, but just have some rules. Have some rules right now, okay? And guys, again, something different we're doing today. We're on the 15-minute candles. Normally we're on the 5 minutes, okay? So rules, guys, if we're waiting for that full 15-minute candle close, we got to watch 9:30 all the way to 9:45. Believe me, we're going to see bullish candles, we're going to see bearish candles, we're going to see wicks, we're going to see everything. But, don't get rattled if we're waiting for a body close. If not, flip to your 5 minutes. Watch your 5 minutes. If go to your 3 minutes or 1 minute. Pick your time frame, okay? Right now, NASDAQ is still coiling up in here. We've got US30 that is technically breaking out. Let me see what's going on in the pre-market right now. Let's see if there's any big notable names across the board. What do we got going on? Not much. I see things are up 0.5%. Some things are up negative. Nvidia, one key name, is down negative 1.5% right now. Google is up 1.5% right now. Super micro SMCI chips are negative 1.5. AMD is down right now. So chips are down early. No notable names that are like considerably up or down right now. Okay, so everyone, let's have a safe Wall Street market open and just trade smart. If you do take some trades, mind your risk management, and let's see what happens. Okay, so we are impulsively breaking out on a 15-minute bar on US30. We're trading at the highest point of the day right now. We broke out. That was a previous high. So it is an impulse breakout right now. Will it come all the way back down to retest this level? Possibly. Or will it just open and continue driving out of here? Okay. So first thing I do is I'm going to figure out where 50% of this body is when it officially closes with this big red marker here. I see that NASDAQ is still in the zone, still in here. It could possibly break out, but you see US30 kind of got a head start breaking out of here. Why? They're different indices. Maybe something is causing that. Okay, so wow. Okay, so why do I have that white line? What's that white line up there? That's that hourly resistance up there. Okay, will it close above there? Okay, so I'm kind of trailing it behind to figure out where 50% is. But the best pullback would be back down, like, you know, right back down into here. That would be a great opportunity. Look for a pullback buy inside there if it comes in there. But 50% could come down right there, catch a wick and go back up. It's got a small wick, so get ready for like a quick little pop and drive if it does that. Okay, it's ignited bearish coming down, holding so far. The white line could flip right now. There's the flip and the pop. Okay, now it could drive. Like if I'm scalping that for those quick little 5-minute candles, those are big body moves, right? Okay, NASDAQ is going opposite, bearish right now. Okay, so you know sometimes when you get that pop and that drive, you know, like it could be a pip and dip move. That's 35 pips, like, you know, maybe 40. Okay, so just like a move like that. Wow, 50 pip move. Like you see how quickly it retested the white line, short wick pop. That's what I'm saying. If you're watching the lower time frames, you got to know exactly what you're looking for. Okay, that's a beautiful move. I wish I was in that, but I'm not following that 5-minute candle. Holy, okay. So very, very, very bullish. Okay. We have a daily marker up here at 45,210 yellow line. Okay. Wow. US30 looking great. Miss Jones looking excellent. NASDAQ is coming back down, maybe for a possible retest in here. Okay. So maybe NASDAQ could be a good buying opportunity in our point of control zone in here. Okay, so you see, we didn't get 50% pullback. We didn't get our zone discount buy down in here. This has 13 minutes to go. That was the first 2 minutes of that open. And is it ever driving when it popped that wick? That's why, guys, over the weekend, learn what are firecrackers. We've got a couple webinars on what are firecrackers. Those short wick, small pop, shallow pullbacks, the pop and drive. When you have either news or market opens, that's when you get that big volume push. Okay, does it always happen like this? No, but that there was a proper setup. So if you're waiting for a pullback and you missed out on this, okay, don't FOMO trade. Remember, no more FOMO. You're not the only one waiting for a pullback down here. Believe me, you're not the only one. I'm waiting, and millions of other traders are waiting for pullbacks down in here. Institutional players are waiting for pullbacks. Okay, you know, eventually it might come down here. It might not come down, you know, in the next 15, 30 minutes, maybe 1 hour, maybe it will eventually come back down there. Okay, but right now it's not. That doesn't mean that you just buy the high. And that's, again, are we not here to learn about patience, discipline, how to buy a retest, a pullback, a discount area? This is not a discount area. You're buying at the highest point possible. Discount areas are down in here. NASDAQ, fantastic move coming in our green zone. Okay, but Now the volume is still inside here. Will it start to close above here? Maybe NASDAQ might have its move coming through here, okay? So we could entertain maybe some buys on NASDAQ if it can get back above here and close above this daily high. Erythrin, thank you, bro, for moderating. I appreciate you, bro. Thank you. Omar, that's funny, man. Oh, gold, guys. Gold was a good setup, okay? Anyone take a gold buy? Anyone flip the zone? Right there, you know, you got a 15-minute bar close above, came in right there. You know, you could have bought right here at 9.25 and your Captain Boom, you got it. Nice. That's a good little setup for gold. Guys, it met every confirmation. Closed above right there, you know. On the 15, even the 15, came back up, closed above, ignited bar, breaking, pushing, okay? So we got a good, when we broke that low of the day, remember that sell we had? Kind of got gobbled right back up and driving through here, okay? So gold's making a nice move. NASDAQ, we came in here, still in this consolidated area. NASDAQ is not the greatest right now. US30 had a beautiful bullish breakout, okay? This is the first 5 minutes, okay? So far we got rejected. That's our highest point today right now. Crown and Crown, you're in a gold buy? Congratulations, man. That's nice. Thanks, Arifran. I appreciate you, bro. Are we going live with Jerome Powell, Marquis? Yeah, I think we will. I think we'll stick around. If you guys get the likes up, guys, let's hit the likes and we'll stick around. We'll listen to Powell. We'll watch the markets. Hit those likes. Subscribe to the channel, and let's stay a little longer, okay? I hope you guys took a break. I didn't take a break. Sorry, guys, but I hope you guys got a break. I hope you guys refueled, got some energy. And let's keep an eye on our financial juice news to the left of us over here, because news might be coming in so we can keep up with what's going on. Okay, so our 15-minute candle broke out. We got to the highest point of the day. It's getting rejected right now. Will we possibly get maybe a retest down at 50% of this point of control of this candle? Maybe back down to the official zone right there? Or will it continue to fill back up? See, guys, 15-minute candles are much, much, much different than 5s. You know, you got to be patient with these things, okay? But if you guys don't understand what a firecracker is, we got to learn all about that. Remember when you were a kid, when you're playing with firecrackers, with those firecrackers with short wicks, and you light it in your hand and it blows up, you learn your lesson real quick. And then you learn with those firecrackers with longer wicks, it takes a while for those ones to burn and blow up. So same thing with a candle. That's a short wick. As soon as you light it, there's the pop, the explosion. Remember what we were saying about candles with big wicks? It takes a lot to come all the way down, all the way down, all the way down before it explodes and drops even further. So it's a neat little analogy I taught myself. I learned it when I was very young, when I blew up firecrackers in my face, and I almost blew my face apart. But I learned how to trade candlesticks with being a young, stupid kid with firecrackers. Look at now, we flipped on NASDAQ. So this could be an impulse breakout, okay, on a 15-minute candle. It could be an impulse breakout. If you want to reduce the time and go down to the 5, look at the 5-minute candle that could impulsively break as well. But you could watch this 5-minute candle in the close because it's got 2 more minutes as opposed to waiting for 7 minutes for a 15-minute candle to close. So there's kind of your confirmations, whatever you want. If you're a 5-minute trader or a 15-minute trader, but you got to follow your time frame. Okay, if we follow that 5, let's follow that 5. Let's just follow this 5-minute. Big bullish engulfing candle coming right back up to the highest point of the day. It did technically break out, but will it close above there? What about today's news for gold? Yeah, it's good. Powell will have a big impact on the entire global markets, okay? Will affect every security you're trading. Why? Because it's a global symposium in front of the world, okay? So interest rates in the US affect the treasury bonds, 30-year, 10-year, where nations around the world are invested in and trade them, okay? So this will have a global impact for gold, for everything, okay? It's a big, big, big day. It's held once per year. This 3-day event is held once per year. It's not held once every month. It's once per year. Okay, so we got 30 seconds to go in the close. This is on a 5-minute candle, mind you, okay? So I'm just watching to see if 5-minute volume will close above there. If it doesn't, we're still in this zone. You know, it could come back and break above there again, then it's an impulse break. So just have some impulse rules if you are trading, okay? I like to, if I'm going to trade an impulse candle, if it comes down to about 50% point of control, picks up some liquidity, then impulsively breaks out, okay? Look at our 5-minute candle closing again on US30 right at the highest point again. Right near the highest wick, it could open engulfed and continue to drive. Ignited, yep. Short wick, maybe it will pop a little further. If we're waiting for a pullback, we got to wait. So the 5-minute candle didn't close above there. It is ignited, pushing down. Let's see if it gets a shallow pullback and can come drive back up and drive out of here. If we're looking on those 15s, what we've been concentrating on, you know, the 15-minute candle now has 4 minutes and 38 seconds. Okay, I have not had a pullback on, you know, US30 to jump in on a position. It's just continuing to drive without me, and those are those FOMOs. Okay, so you want to take it on NASDAQ, maybe you can take it on NASDAQ. Okay, already broke out. Maybe watch for one slight pullback to come back down in and then drive. Otherwise, you know, get ready to buy this thing. Okay. Even if you're waiting for a pullback, I know it sucks because the market's running without us, but I'm telling you guys, patience is the name of the game. You know, some days the markets trade like this. You don't want to learn to just always take impulse or buy the highs, because some days you're going to get burned. Okay, so just stick with what works. Always wait. Being patient and disciplined is, in my opinion, the best way. But sometimes there's time and place when to take impulse trades. Like you see how it opened, it came down, it swept all of that liquidity below us, then it came up. So it's just redistributing all of the liquidity is swept. Okay. Talk about gold. Gold is traded right into. Remember that block right up there? Remember what I was telling you guys? Right over there, that 50%, that zone on the hourly. Look how we just tapped right into it, guys. So all the gold buyers out there, if you got that, we just traded perfectly right into 3336, right in there. Okay, so maybe scale out some profit in there. Maybe start to move your stop loss to break even, collect some money. If it does continue to close above, flip that zone green. Maybe we'll drive to the highest point of the day. But that is resistance for a reason. Okay, we talked about that earlier on in the call. But good job if you guys got those gold buys. If you guys are in buys on the US30 and NASDAQ, congratulations. We're going to get our first 15-minute candle close in 2.5 minutes, guys. And remember, 10 a.m. is Powell. Okay, so the market is moving up in anticipation of Powell's speech. Maybe it will correct itself down and then continue to skyrocket on good news with Powell. Okay, so I'm waiting to buy some pullbacks. I can wait all day to buy them. Yeah, buy the dip. I'm trying to buy the dip, but there is no dip right now. Okay, and just a heads up above us. If US30 gets up to that daily point of interest, 45,215 and you're in buys, I would consider doing something at that yellow line. Similar with NASDAQ, if it breaks this point and gets up to that red zone up there around 23,300, I would consider, you know, putting some money in your pocket, reducing your risk, because that's a big red block above us. Wow, US30, holy shit. Just driving. Man, so it's actually beautiful when you watch that. Oh, I should have pulled the trigger right there. The woulda, shoulda, couldas. Oh my God. I hate 15-minute candles. I'm sorry, guys. I hate these things. That's why I don't trade these. That 5-minute. Oh, man. Right there. 925. Close right at the high. Perfect retest of the white line. Pop. Buy. Stop loss could have been below there. Driving. Oh, my goodness. I'm sick to my stomach watching these. I hope you guys are enjoying this 15-minute candles because they're not for me. You can tell I don't have the patience for these. 5 minutes all the way, boom. 5 and 1 minutes are all the way for me. Sometimes watching the 5s, but trading the 1s. So this is a lesson, guys. You know, you can, for all the 15-minute traders, I respect you guys, but this is not the way how I trade Wall Street Market Open. I just missed out on my entire daily goal right down that bar. Anyways, but let's stay focused. Let's see if we can catch pullbacks, right? Where's 50% of that candle? Okay, so if I'm still looking at the opening, closing, maybe if it retraces to right there is 50%. Okay, do I have a bullish point of control of that first 15 minutes of Wall Street Market Open? Right there. Okay, so anywhere in here. Can I get a pullback back down into here? Again, it's open bullish, strong, breaking the wick. Probably wants to get up to there. You know, it could be getting a little overbought. Look at it. The 15 minutes trading at 85 RSI. It could reach a daily position. Maybe I could look to short that at that daily point if it gets up there and cool off the market a little bit, make some money on the way going down, and then get the hell out of the way prior to Powell speaking, because he could launch it right back up by saying rate cut or possible rate cut. Okay, so if you guys are looking for a pullback on NASDAQ, 50% of that body is right there. The 200 EMA is agreeing with us at 50%. If you can get a better pullback at the green zone where we technically have broke out of, a proper retest will be all the way back down there. Okay, remember, this is a 15-minute candle. Okay, so here's the bearish push down. Let's see if it can catch a wick now. Okay, I might even sell this. Okay, I'm going to go in a little quick scalp sell to come down into the green zone. I'm going to sell US30, see if I can just cool off the market a little bit, get a quick pips prior to Powell speaking, maybe cool off this market down in there. Even if it drops right in that green box, that's about a 50 pip drop, okay? So let's just see. It's a shooting star candle. I know I'm entering, but I'm entering how they pinned it, maybe pushing down just to travel back down in here and just trade back down inside here. Just to test it out, to cool off the market a little bit prior to Powell speaking. And next week, I won't be trading 15-minute candles, okay? We're going to go back to our 5s. I like 5 and 1s myself. Red Clues, welcome. Good morning, man. Thanks for joining. Where am I setting the stop loss? Just above that daily point of interest, right above here, like about 220. Okay. But I'm just watching this candle. I might even exit this trade earlier, okay? I might not even let it come up there. Just testing to see if this indecision candle can come back down bearish down in here with 90 seconds to go. Sonia, good morning. Welcome. So gold tapped into that zone, guys. Gold tapped in there, right in there, guys. You know, you got to watch your zones. You know, you can conserve some money by playing it smart. I just want to see if this US30 candle will flip a little bit bearish, okay? Testing out just a small sell just prior to Powell speaking, okay? But I might exit this prior to even, you know, getting stopped out. So I'm just watching the spin top candle, the way how it's cooling off right up here with 30 seconds to go. So I'm just telling you guys in advance, I might close out this trade prior to even realizing, you know, up here. I just want to watch, see if it can turn into spin top and have just a little leg cooling off back down in here, just prior to Powell speaking. And then it could just come back down in here and take right back off, okay? Testing out just a small sell in here on US30. Okay, so here's the close, bear spin top candle. So could open, again, bearish, come back down. It's that bullish ignited open. Okay, I hate those opens when I'm trying to sell something. It's great open when you're buying something. Okay, so the reason why I have this red line here is from the 15-minute bar, from that previous 15-minute high. Just want to see if that volume will stay below that 15-minute high. And maybe just come back down and retest this 15-minute low and just trade down in here a little bit just to cool off this big momentum coming out of the market open. Collect a few pips down in here if I can, and then get out. Yeah, pull back on gold. I told you, like, right, guys, that red zone. Yeah, right in there. That was that where it kind of pulled back, came back down, could break out of here, okay? So that's what I'm looking for to, like, on US30. Just a quick little cool off and then get out of the market. Grab those pips and get out because I want to get out of the way because Powell could say something, could drive up this market. So let's see if we can just continue to break that low down in here. Maybe get some negative volume closing below there. Maybe can push down. But my target is, you know, like anywhere near this green zone, okay? Because I know measured move all the way down to the middle of it is approximately 50 pips down there. So even getting 30, 40, okay? But now it's pushing down, okay? So again, let's see where, if it still stays bearish down here, can it close down here and get one more maybe bearish bar? It's 951, 952, so we're about 8 minutes away from the conference. So I kind of want to maybe get this to drop down and get out of the way. I'm back to basically break even, okay? But you know that 15-minute candle kind of doesn't want to get down there. Yeah, so if it comes back up to that red line and kind of flips blue, I'm going to exit this trade. I'm just going to close it out because I don't want to be part of a bullish hammer, continuing to fill, and then I'm getting closer to Powell's speech. I just want to get kind of out of that, okay? So just heads up, just so you guys know. I'll verbally tell you guys, yeah, I'm going to close it out. I don't like the way how it's set up. It came back down to my entry, but I don't want to hold my stop loss all the way up there. So, you know, I lost a little bit of pips. I was trying to get that quick little cheeky sell down there. Didn't happen, okay? So I get out of the way. The buyers are proving to me they're still strong. They're strong. I'm not fighting them, okay? They're proving to me when it came down there, you know, we didn't get that flush. So they're still strong. So I get out of the way. I take my small loss and I get out. Originally, I told you guys I had my stop loss above there, but you know, I see how things are coming down. I don't like how they're coming up. Could continue to go up there. I'm out of the way, okay? So, you know, that's how I trade. I'm back to these 5 minutes. We got to focus on, we were talking about staying on the 15s, okay? So that's just me being the scalper that I am. So we're back to these 15-minute candles. But more importantly, in 6 minutes, we're going to have the Powell's conference. Do you guys have a link? Anyone have a link? Is there a link? Guys, thank you guys. 2 more subscribers. We'll get to 82,800. I appreciate you guys. Maybe we can, is there a link on YouTube or do you guys have anything? Oh, there it is. Stepping in. Let's see. Maybe this is the link. Oh, 5 minutes. Okay, guys. We'll have it here. Just let me see. Let me just change up something here. Let me add sound. Do you guys hear anything? We'll see if we got some volume. Keep an eye on that. Can you guys hear me okay? Yeah. I'll see if I can get that sound when we get going. Okay, maybe we can listen in on the conference while we're watching the candles. Okay, so still pretty bullish, okay? Gold, continue. Guys, if gold closes above here, flip your zone, red to green, kind of broke through that trend line. It could definitely continue to drive to that highest point of the day, or it could pull back down in here, okay? But here we go, guys. 3 more minutes. This is exciting. What do you guys think? Powell is going to hint anything about a rate cut, pause, talk about monetary policy. Okay, so NASDAQ is pulling back, okay, to our zone right here. 50%. Will it continue to drop down in here? Rate cut, 25 points. That would be nice. That would probably send the markets moving, continue to be bullish. But, you know, thinking about that, then that maybe the market will pull back and then drive back up. So, you know, we could still consider buying pullbacks. US30 has not really pulled back anywhere as of yet. NASDAQ is doing its pullback right now. So this 15-minute bar is going to close in 2.5 minutes right prior to Powell speaking. So, guys, I say if we can, maybe wait it out, listen to what Powell is saying, if we can hear him. If not, Financial Juice will be over here giving us exactly what's going on. And maybe around 10:15, maybe engage in a trade, maybe 10:30. Look at this, okay? So NASDAQ broke out, hit up there, coming big bearish engulfing candle coming all the way right back down. Oh, this is what I was just a little too late on the US30. Oh, man. It's okay. We'll get the next one. Who wants to take a crazy scalp 2 minutes prior to Powell coming down? Yep. Trump speaks to guys as well. Yeah, I believe that's at noon today. Yeah, President Trump speaks at noon. Yeah, don't forget that later this afternoon too, guys. Omar, you almost hit the button on sell. I think maybe it will flush out. Man, that's what I was kind of looking for. I was kind of one candle too late. Maybe I'm being too cute with my stop loss here. Anyways, okay, we're right back into our consolidated zone. Holy shit, okay? So Wall Street drove all the way back up and it's coming all the way right back down, okay? So, you know, if you're in a buy, I hope that you guys, you know, secured some profit, got some money out. But let's see what happens, okay? Let's see if it comes on here. Okay, here we go, guys. Open bullish, ignited. Wow. Holy shit, okay. Whoa! Oh my god. Okay, if you're in buys, congratulations. Oh man, it hasn't even started. Yeah, spreads are crazy. Everything is wild right now. Oh my god. Oh, wow. Oh my god. Everything is through the roof. US dollar is selling. Wow. Okay. So, oh my god. The US dollar is dumping. Gold is pumping. Stock markets are pumping right now. Holy shit. Okay. What's going on with this link over here? Why is it not starting? Wow. Holy shit. Wow. Anyone got a little bit of that? That's raising the roof right now. Holy. So that was a tiny pullback candle and just open ignited. There's nothing you can do if you just look at the 1 minute. It's just right at 10 a.m. just popped. Okay. There's going to hopefully be a pullback. But, you know, wow. Okay. Also factor in your spreads too. Holy shit. The US dollar is dumping. Okay. Wow. Dennis, you got that? I don't know, guys. This link is not working right here. Is it just me, or it hasn't started yet, or is there another link? Shit. I really wanted to listen to what he was going to say. Holy, okay. Unbelievable. Okay, so we got breaking news from Financial Juice. Fed's Powell. Shifting balance of risks may warrant adjusting policy. Okay, so now we're going to have some Financial Juice coming in. I'm not sure that that link works.
We're doing a careful scrub of the board and all the reserve banks, and we're going to find 10% of employees who can do something else, where we can streamline our operations, and we think we can get there in a couple of years. We think we can do that, and we think this is to carrying out our critical missions. So this is something you do very carefully, thoughtfully, and you do it again, respecting that we have critical missions to carry out. I've had experience, a lot of experience in my prior careers, with headcount reductions and things like that, and this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. I think the Fed will be fine. I think no one will notice any decline in our ability to carry out our missions. And I think it's just us wanting to demonstrate to the public that we are actually good stewards of their resources. We're effectively wiping out 10 years of headcount growth with this. So, I mean, we wanted to show that, that we're good stewards.
How is progress on reducing headcount going so far? Are you on track to meet the goal?
We're just at the very beginning. As you know, we're doing a buyout program. We're going to hit that goal. I think many organizations find that they can do this. You don't want to do it every year or anything, but you can do it at intervals, and you wind up not interfering with your ability to perform your job.
For the labor market to remain in balance, near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment,
Volume is okay. Let me know, guys, on YouTube. Can you guys hear?
Trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations.
Okay. So Fed Powell, the situation suggests downside risks to employment are rising. The situation suggests downside risks to employment are rising.
The July employment report, released earlier this month,
well,
showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months,
gold pumping,
down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially.
Gold right up to that daily point of interest, 3355, tapped right into that.
A large margin of slack in the labor market, an outcome we want to avoid.
Holy.
The unemployment rate, while edging up in July, stands at a historically low level of 4.2%, and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment.
I'll let Powell talk. Growth. I'll just do my charting, guys.
Labor supply has
looking for pullback buys,
sharply lowering the break-even rate of job creation needed to hold the unemployment rate
8 more minutes
constant.
For this 15-minute bar to
Indeed,
close.
labor force growth has slowed considerably this year with the sharp fall-off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%.
GDP has slowed down.
Roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or
slower consumer spending. Okay, this is him,
Turning to inflation, higher tariffs have begun to push up prices in some categories of goods.
Higher tariffs.
Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago.
Remember the core PCE folders we traded? That 2.9, we remember that.
A notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts.
Guys, I'm just waiting for this 15-minute candle to close in the next 6 minutes.
Whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve.
Guys, congratulations on the long buy on gold.
Process.
If you buy at 3325,
it's also possible, however,
congratulations,
that the upward
guys.
pressure on prices from
Following the
tariffs
signal.
could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed.
3325
One
down
possibility
in here.
is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks.
Guys, we just broke
that
a new
outcome
all-time
does not
high
seem
on
likely.
US30. Remember this orange
Another
line?
possibility is
45,285. This is a new
new
all-time high.
Actual inflation with them.
Right now,
Inflation has been above our target for
45,500
more
on
than
the
4
dot.
years and remains a prominent concern for households and businesses.
Miss Dow Jones doing her
Measures of
thing.
longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored
US dollar
and
selling
consistent with
off.
our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing
Papa
inflation
Powell's
problem.
killing the US dollar right now. Trump
So,
is not going to be happy
Putting the
with this.
pieces together, what are the implications
man.
for monetary policy?
Monetary policy, listen
In the near
guys.
term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks.
Listen carefully,
We will
guys.
never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run
Just
goals
say
and
rate
monetary
cut.
policy strategy, which we refer to as our consensus
Man.
statement to save time,
It's always got to say so much
describes
BS.
how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5
Traders
year
now put
intervals.
90% probability on a Fed rate cut in
This year's
September
review
versus
included
75%
three elements:
before
Fed
Powell's
listens
remarks.
events at reserve banks around the country,
Traders resume
a
fully
flagship
pricing
research
in two
conference,
Fed
and
rate cuts by
policymaker
by
discussions
year
and
end.
deliberations
By the year end.
supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable
Wow,
across a broad range of
it's going
economic
through the
conditions.
roof, guys.
At the same time, the framework needs to evolve with
15-minute
changes in
bar
the
is gonna
structure of
close
the economy
in
and our understanding of those changes.
2 minutes.
The Great Depression presented different challenges.
Let's figure out
from
where the
those of
point of
Great
control is.
Inflation and the
50%
Great
zone.
Moderation,
Use your
which in turn are
Fibonacci.
different
Figure
from
it
the
out.
ones we
Maybe we'll
face
catch a
today.
pullback later today.
At the time of the last
Same with
review,
US30 and
we were
NASDAQ.
living in a
guys.
new normal.
Okay.
characterized by
do
the
it
proximity
without
of
me.
interest
I'll
rates
be
to the
doing it, but you
effective
do it
lower
too.
bound, or ELB,
Get in the habit of learning
along
how
with
to
low
do
growth,
this.
low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on
One more
inflation
minute to go
and
to the
inflation
close on this
expectations,
15-minute bullish
triggering
bar
an
across the
adverse
bar.
dynamic.
Ignited bullish bar
The
closing near the
economic
high on
conditions
both
that brought the
NASDAQ
policy
and
rate to the
US30
ELB
and gold.
drove the 2020 framework changes
Okay, so
were
we'll
thought to
look
be
for
rooted in
pullback buys
slow-moving
unless you want
global
to try and
factors
sell
that would
that.
persist for an extended period. And they might well have done so
Amazing,
if not
Sean.
for the pandemic.
Good for you, bro.
The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate
Wow,
risks
closing at
associated
a
with
new
the
all-time
ELB,
high on a
we adopted
15-minute candle.
flexible
Holy
average inflation
shit.
targeting,
Holy
a makeup strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular,
Okay,
we
here's
said
the
that
close.
following periods when
Fibonacci,
inflation had been running
open,
persistently above 2%,
close,
appropriate monetary
50%
policy would
zone
likely aim to achieve inflation
right there.
moderately
If I
above
can get a
2%
pullback
for
buy
some
in there,
time.
I'll entertain.
In the event, rather than low inflation and the ELB,
NASDAQ,
the post-pandemic
open,
reopening brought the highest
close,
inflation in 40 years to economies
pullback
around
zone.
the world. Like most other central banks and private sector analysts,
Right here.
through year-end 2021,
right at that yellow
we
line.
thought that inflation would subside fairly quickly without a sharp tightening
Gold,
in our
pullback
policy
zone.
stance,
Wow,
as
it's
this
opening
slide
United
will
wants
show.
to continue to drive.
When
Gold.
it became clear this
Holy
was not
shit,
the case,
okay.
we responded forcefully, raising our policy rate by 5.25 percentage
here,
points
open,
over
close.
16 months.
Pullback zone
That
for
action,
buys.
combined with the unwinding of pandemic supply
It's a
disruptions,
little bit of a bigger zone
contributed
because
to
the
inflation
candle's
moving
so
much closer to our
big.
target
Okay, right there.
without the painful rise in unemployment that has accompanied
Will
previous
it come
efforts
down
to
to
counter
us?
high inflation.
Possibly. Now
This year's
or
review
maybe
considered
half
how
an hour,
economic
1
conditions
hour
have
from now.
evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic.
Okay, so that's
With
pullback
inflation
zone.
above target, our policy rate is
10
restrictive,
to 50%.
modestly so.
I'm going to
in
place
my
an
view.
alert.
We cannot say for certain where rates will settle
So
out
I'm
over
placing
the longer
alerts
run,
for today.
but their neutral rate may now be higher than during the 2010s.
At some point, maybe I'll get a pullback
reflecting
buy.
changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated
gonna wait
communications about our response
All day
to high
today
inflation.
to get a pullback.
We
maybe
concluded
in here,
that the emphasis
maybe
on
even
an overly
deeper.
specific set of economic
if you want to
conditions
try and sell,
may have led to some confusion.
It's
and
don't
as a
do
result,
that.
we made
Okay?
several
'Cause
important
it could
changes
just
to the
dip a little
consensus
bit and
statement to
continue
reflect
driving.
that insight.
Powell is still speaking.
First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted
my
that
God,
our
Sarah,
monetary
you read
policy
your profit
strategy
wrong.
is
You made
designed to promote maximum
8.5% on that
employment and
trade.
stable
Holy
prices
shit.
across
Samuel,
a broad range of
2%.
economic conditions.
Real money, amazing.
The difficulty
man.
of operating near the
Sergio, you
ELB
never sell the all-time
remains a
high.
potential
Yeah,
concern,
you'll get it maybe a
but
small,
it is not our primary
nice pullback
focus.
like now.
The
But
revised statement reiterates that the
believe me,
committee
there's
is
a lot of
prepared
buyers that
use
want to
its
buy.
full
Take it
range
right back up. So
of
careful with selling.
tools to achieve its
The
maximum
idea is to
employment
buy
and price
pullbacks
stability goals,
at these zones.
particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out,
guys, anyone
the
looking
idea
at
of an
the US
intentional
dollar right now?
moderate inflation overshoot had proved irrelevant.
Look at the U.S.
There
dollar.
was nothing intentional or moderate
Okay.
about the inflation that arrived a few months
Look at
after
this
we
thing,
announced
okay?
our 2020
So we're
changes
dropping
to the
down
consensus
to just
statement,
under
as
98
I
now on
acknowledged
DXY.
publicly in 2021. Well-anchored inflation expectations
some support for
were
US
critical
dollar
to our
today.
success in bringing down inflation.
I'd be looking right
without a
here. That
sharp
double bottom
increase in
bounce back
unemployment.
in August.
Anchored expectations
Okay,
promote
at
the return of inflation to
97,
target when adverse
60,
shocks
if it
drive
gets
inflation
down there.
higher, and limit the risk of deflation when the economy weakens.
If the US dollar finds some support right here,
Further, they allow monetary
that
policy
could be
to
where,
support
you know, we
maximum
look for a
employment in
pullback
economic
buy.
downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being
US30 is
of
cooling
all
off a little bit.
Americans. This theme
Will it come
came
deep
through
down
loud
into
and
our
clear
point
at
of
our
control
Fed
zone, or
events.
maybe at our
The
yellow
past
line that
5
was
years have
previous
been a painful
resistance turning
reminder
to
of the
support
hardship
here
that high
at
inflation imposes,
45,400?
especially on those least able to meet the higher costs.
Maybe it's got to
of
kind of do
necessities.
like a
Third,
double top,
our
come
2020
up, come
statement
back down,
said that we would
maybe up
mitigate
again,
shortfalls
then come in here,
rather than
then go
deviations
back
from
up.
maximum employment.
Possible.
The use of shortfalls reflected the insight that
If you
our
want to start to
real-time
short sell
assessments
a
of the
shooting star
natural rate
candle,
of
you can,
unemployment
but be
and
careful.
hence of maximum employment are highly uncertain. The later years of the post-global financial
Gold is
crisis
continuing to
recovery
take off.
featured
Holy
employment running for an extended period above mainstream
goodness.
estimates of its sustainable
Wow.
level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates
So a rate
of the
cut,
natural rate of unemployment.
90%.
We still have that view,
90% is what analysts
but our
are
use
saying.
of the term shortfalls
I haven't
was
heard
not
him
always
say
interpreted as intended,
rate cut
raising
out of his
communications
mouth,
challenges.
but
In particular,
it's kind of hinting
the
maybe.
use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households,
down will it pull
employers, and communities.
Yellow
Fourth,
line or in our green
consistent with the
zone.
removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote
Okay, so the
maximum
5 minutes
employment
kind
and
of
price
peaked
stability.
out. That's the new all-time
We
high.
continue to believe that monetary
Coming
policy
down,
must be
maybe come
forward-looking
back up,
and
maybe
consider
a
the
double
lags and
top.
its
Maybe we
effects
can
on the
buy a
economy.
pullback inside
For
here.
this
okay?
reason, our
I'm
policy
looking to
actions
buy in
depend
this
on the
green
economic
zone, the
outlook
90 MA, the
and
red
the balance
line.
of risks
If I
of
can
that
get a nice pullback in there,
We continue to
maybe
believe that setting
NASDAQ
a
will pull
numerical
back in
goal
there.
for employment is unwise because
And
the
we're just watching
maximum
the
level of
15-minute
employment
bars.
is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor, helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public,
Okay, now Trump is
practitioners,
speaking,
and
guys.
academics on the performance of our framework.
Trump, I will
It is
fire
also
Fed's
consistent with
cook if she
several
doesn't
global
resign. We will see if Putin and Zelensky
To
will
wrap
work
up,
together, and
I
we
want
will
to
see
thank
if I
President
need to be
Schmidt
there. I
and-
would
and
rather
all of his
not.
great
We can
Kansas City
keep
staff who
TikTok
work so
going. We
diligently
have
to
American
host this
buyers for
outstanding
TikTok.
event
We'll
annually,
talk to Xi about
counting a
TikTok
couple
when
of
appropriate.
virtual
Okay, so Trump
appearances
is talking
during
about
the
TikTok
pandemic.
now.
This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and
Do you
I
want
am
me to
so
say
proud
something
to
to
be part of
Powell?
that tradition. Thank you very much.
I'll write in the questions in the chat. You guys want me to write something? We love you. We love you, Papa. We love you, Papa. Thanks for all the pips over the years.
Thank you very much.
all
We'll move
the pips
into the presentations.
over the
so
years.
I want to allow a minute for all of the members of the press to go.
An outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall-off in
Okay, guys, I'm going to stay for about like 5 more minutes till 10:30. But you guys know I'm looking for pullbacks inside here.
Overall, while the
by the
labor
red
market
line,
appears to be imbalanced,
it came
is
down,
a
but
curious
not
kind of balance
necessarily
that
in that
results
point
from a
of
marked
control
slowing in
zone.
both the supply
So
of
I maybe have to
and
wait it
demand
out
for
a little bit more
workers.
longer. Maybe
This
it will come
unusual
down in there,
situation
and then I'll be
suggests
looking.
that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs.
15-minute candle
and
has
rising
not
unemployment.
came in, guys. So that's the patience.
At
That's
the
the
same time,
discipline. I
GDP
know it
growth
sucks.
has slowed
It
notably
sucks.
in the first
but,
half of this year
you know, that's
to a pace of 1.2%.
how it works when you're waiting for it to come into
roughly
zones.
half the 2.5%.
I've got
pace
alerts.
in
Maybe it will come
2024.
in the next 30 minutes, maybe
The
next
declining
hour,
growth
maybe
has
by
largely
noon.
reflected
Who
the
knows?
slowdown in
But
consumer spending.
I'm waiting for it today.
As with the labor market, some of the slowing in GDP likely reflects
Same
slower
with gold.
growth of
If
supply
gold can
or
trade
potential
back into
output.
that point of control, that big bullish market
Turning to
open at 10,
inflation,
it's
higher
right there.
tariffs have begun to push
for
up
gold.
prices in some categories
And you
of
guys see
goods.
what we're waiting for on
Estimates
NASDAQ
based
and
on
US30.
the latest available data indicate that
No,
total
Sergio,
PCE
don't give up your
prices
profit.
rose
Just watching.
2.6%
If
over
there
the
is
12 months
something you
ending
guys
in
want to test
July,
out, go with a small lot and just
excluding
test.
the volatile food
Something
and
that
energy
won't screw up your
categories,
weekly goals, your
core
daily goals. If
PCE
it comes in
prices
there,
rose 2.9%,
see if it comes in there,
above
will
their
it
level
bounce
of a
back
year
up?
ago.
Give you a little bit of
Within core,
confidence to
prices of
maybe
goods
look for
increased
these in the future.
1.1%
Okay?
over the past 12 months, a notable shift from the modest
What are the new
decline
levels for
seen
gold?
over the course of
Right over here.
2024.
Right here.
In contrast, housing services inflation remains on a downward
3,349.50
trend,
all the way down
and
to
non-housing services inflation is still running
3,343.
at a level
The
a bit
psychological
above what has
midpoint
been
exactly
historically consistent with
3,346.
2%
Right
inflation.
there. That would be a
The
beautiful
effects of tariffs on consumer
pullback area.
prices
If we
are
go
now
look in the
clearly
past,
visible.
you can see
We
how it
expect
was
those effects to
resistance over there.
accumulate over
We
coming
now
months,
closed
with
above
high
it with the
uncertainty
news
about
with
both
Powell.
timing
So if we
and
get a
amounts.
pullback in there,
The
that could be a
question that matters
great
for
buying
monetary
opportunity
policy
for
is whether
today,
these
guys.
price
Okay?
increases are
Gotta be
likely to
patient with it.
materially raise the risk
But eventually,
of
maybe
an
we'll come in
ongoing
there and
inflation
you can
problem.
get a nice buy out of there.
A reasonable base
You're
case
not the
is
only
that
one
effects
waiting.
will be relatively
There's
short-lived.
a lot
a
of
one-time
investors,
shift in the price
banks, that's the
level.
point of control,
Of
where
course,
it wants to get in.
one time
okay?
does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers,
So again, it came up,
setting
it
off
pinned it down.
adverse
So it
wage
could be
price
like a double
dynamics.
top on a 5-minute. Came
Given
up,
that the labor market
back
is not
down,
particularly
came
tight
back up,
and
they're
faces
rejecting it
increasing
back down.
downside risks,
So it just has to come down
that
there,
outcome
break,
does not seem
maybe right
likely.
there. Could be our opportunity to buy
Another
it back up.
possibility is
Okay?
that inflation
Just remain
expectations
patient.
could move up, dragging actual inflation
Eventually,
with
maybe it
them.
will come down in there.
Inflation has been above our target for more than 4 years.
Wow,
and
guys, we've
remains
been almost
a
going
prominent
5
concern
hours and
for
I haven't moved
households
from
and
this chair.
businesses.
Can I get a like for not
Measures
even
of
moving
longer-term
for 5
inflation
hours?
expectations, however, as reflected in market and survey-based measures, appear to remain
Subscribe
well
to the channel,
anchored
guys.
and consistent
Amazing.
with our
We got above
longer-run inflation
82,800.
objective
You
of
guys are the
2%.
best. Thank you guys so much.
Of course, we
we're
cannot
continuing
take the
to make
stability
all-time
of
highs
inflation
with the markets as
expectations
well
for
on
granted.
our YouTube
Come
channel.
what
So
may,
thank you guys so
we
much.
will not allow
We do
a
appreciate
one-time
it.
increase in the price level to become an ongoing
You guys are
inflation
great.
problem.
Thank you guys to everybody in
So,
Zoom and YouTube. I appreciate
Putting
you
the pieces
guys.
together, what are the implications for monetary
Okay, listen.
policy?
He's putting the pieces together.
In the near term,
I always say
risks to
put the
inflation
pieces
are
of the puzzle
tilted to
together.
the
Let's go.
upside,
Let's listen.
and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago.
Sarah,
And the
congratulations.
stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook
Oh, is it
and the
already over
shifting
his
balance
stream?
of
Is it playing
risks
again, guys?
may warrant adjusting our
I'm sorry.
policy
If it's
stance.
playing again, I'll turn it off. Okay, it's all good. I think he's done. Cracker Barrel. Where are we at? Where are we at? Perfect. Okay. So gold is continuing to drive. Amazing, Sarah. You've withdrawn your profit. Make it real. You can't give it back. Excellent. Excellent. That's the beauty of trading, guys. I hope everybody on this call will get to some point withdrawing money from their real account, if it's your own money or a prop account. You know, realizing that money, actual going out into the restaurant today and taking the family out, say, hey, no worries, I got the bill today. You know, order what you want. That's something. You know, a lot of traders, I hope you guys aspire to get to that point. It's rewarding, guys. All your hard work, you know, paying off, and you can help others, and then they appreciate it too, your hard work you put in trading. It's not easy to do this. You know, our families take a toll on us as well. It's not easy, guys. You know, so if you got a spouse that supports you, you know, my wife supports what I do. My kids support what I do. They know when Dad's down here in the dungeon down here. You know, they try to be quiet and let me do my thing because I take them out to mini golf and I take them out to the movies and I take them out bowling and things like that. So I reward them for being good, you know, letting me do my thing. But my children have grown up with me doing this from day one. So they haven't seen anything else. You know what I mean? So, but for you guys, you need family support. So I hope, you know, I'm there supporting you guys just like your family is there for you guys as well. You know, we're all family in this. You know, I know what you guys go through. I know the tough times in trading. It's not easy, guys, but some of you guys are doing really well, and I want to congratulate you guys. You know, just keep it up, guys, but just trade smart, you know, like don't go against your rules. Like you see me, I'm still waiting for a pullback. I'm waiting for one in here. I'm waiting one in here. Same with gold. And you see the market has not pulled back yet. Okay. It's news day. It's news day. So we can't always just assume that every single day is just going to come right in here and then just go right back up. If it was that easy, guys, believe me, trading would be that easy. So it might not come down here until later today. It might not even come back in here till Sunday night or Monday morning, right? But let's have levels and let's keep them alerted just in case it comes. And when it comes down to us, we could possibly hit a beautiful discounted trade with minimal to low drawdown and go straight into profit, okay? Once you hit one of those, it's just waiting for it to come in, and I guarantee your confidence will go through the roof, just like these bullish candles will. The day when you nail one of those, where you're waiting in there and it comes right in that zone and it takes off, that's going to be the best day of your life. Believe me. When I did that the first time, I was like, no way. No way. All I had to do was just wait a couple hours and it came in there and went right out and I made some money. That was the best day of my life. And I said, I got to learn how to do this every single day. and it's just learning how to be patient and disciplined. Believe me, if you want to buy these highs, yes, you could be making money, but if you practice this on a normal day, it's not always gonna work out like this. Okay, sometimes you buy that and then it drops on you. Okay, so don't learn bad habits. Continue with good habits. I know it sucks waiting for pullbacks. Believe me, I'm a scalper, and it's the worst for me because on the 5 minutes, on the 1 minutes, there was multiple opportunities I could have entered, but that wasn't what we were doing today. Today's focus was on 15-minute bars. I wanted your feedback today to see if you guys like 15-minute candles on these live sessions. But remember, we only see 4 15-minute bars per hour. Our average time on these streams is about 3 hours. So that would allow us to only see mathematically 12 15-minute candles. Sometimes it's not going to develop the pattern we're looking for with those 12 candles. So that's why sometimes I like reducing it down to the 5 minutes, because we see 12 5-minute candles every hour. Then in the 3, we see 36 of them. Then in those 36 5-minute candles, maybe we can see a double bottom or some type of pattern. If we go to the 1 minutes, obviously we're going to see a lot more of them, but they're very fast. But I'll change it up for you guys, no problem. I like doing 15 minutes more when we're in the Tokyo or the London markets where it's slower. But when the markets open up and it's New York and we got high impact news, I like staying with the 5 minutes, but you just got to manage your risk appropriately, okay? So guys, this has been awesome. This has been a great week. We're 5 hours on this call. I've peed my pants about 7 times already, so I think I got to go change my pants and go get some breakfast. And guys, next week, so let's just, next week, not much going on Forex Factory news, but this summit continues tomorrow. It's a 3-day event. Earnings wise, if you want to go through this weekend, go through the earnings, pick your days, look for your pre-market, after hours, big companies. If you want to join our Discord, guys, we would love to have you guys. This is our signal group. Like if you guys caught that earlier today, beautiful buy setup at right over here at night at sorry, this is where are we at? Right here, just before 9 a.m., guys. So, maybe use these as to help with your confluence. That's fantastic buys, but trade these with proper risk management as well. We try our best to look for setups for you guys. And guys, if you want to join our free Telegram, it's pinned at the top of the channel. Thank you to all of the 300 viewers. You guys are amazing. What is this here? Blue check runners. Thanks, Ron and SST. Down for the day. Don't want to blow my profits and FOMO. Great day. Congratulations, bro. You're an inspiration to all of us. Hit daily goals. No more FOMO. No more FOMO. Get out. Get your money. Enjoy the rest of the day. So congrats, guys. The market will continue to absorb what Powell is saying. Trump is going to speak. We're going to have a weekend. Who knows what will happen over the weekend. It's a crazy world we're living in, but let's follow the markets, how we open up Sunday night, Monday morning. We'll do a nice thorough analysis Monday morning. Guys, do you guys like this time, 6 a.m.? I don't mind this. If you guys want to do the 6 to 10 as opposed to 7:10, it just gives us a little extra hour to get in, start doing some more analysis, looking at today's news. If you guys are good with this, I'm okay with it. 6 to 10, let's go with that next week. Let's try that. We don't even need a poll. Let's do it. 6 to 10. If you guys want to join us at 7, 8, that's on you. But I'll be in this chair 6 a.m. Monday morning, and we go from there, okay? So let's do it. Come early bird gets a worm. We'll start doing some analysis. We'll see how volume is moving from London. We'll take our time looking, and then how it's coming in. Do we have any news? We'll prepare ourselves properly, guys, and we'll have all the news. We'll have all the critical areas. We'll scalp the markets, we'll have fun, and we'll learn and earn together. But don't do crazy Uncle Ronnie's mistakes, okay? Ron's getting old. He smokes a lot. I'm that crazy uncle at the cookout. If you bring me, I'll probably embarrass you. I'm that guy, okay? So again, learn from my mistakes on my live sessions and don't do what I do, okay? Yeah, I'm that old guy at the barbecue wearing diapers and smoking a joint. That's me there. What brokers do we recommend, Andy? Oh, you're in the USA. Maybe 8 cap. I was gonna say Fusion. That's the one I use, but it's not. the laws don't allow United States residents, but that's what I was going to say to you. But there is 8 cap is a good one. I see markets, I believe, maybe in the US. Yeah, guys, if you want to drop some in the Zoom, if you want to drop some for Andy, anyone in the US that has a good broker in the US, good spreads, good commissions. If you guys want to drop some names in there, Jay, use Gates FX, Tony, CoinX. Yeah, drop some links in there, guys. How do you join the Discord? Go to our website and visit stocksnipertrading.com, and you can join over here, join the Discord, join the team. Guys, free blogs available. Okay, learn a little bit about dividends. If you made some money today in the markets, look to maybe put some money in dividend securities and earn passive income. That's the beauty of trading and investing, not just day trading or scalping the markets. It's now making a profit and putting it to work for you. You know, as we get older and we start wearing diapers, we want our money to work for us and make us money. I want to sit back and relax and have my money making me money with little energy. So dividend paying securities are nice, sound securities. They're very low risk. They're sound securities. Like I'm invested in Enbridge Gas. Enbridge Gas is an oil and energy company, distributes energy for all of North America. And it's slowly gone up in share price year over year. And it does pay about a 7 to 8% yield. And it's paid out to me like a paycheck every single quarter, every 3 months. I collect money. And I don't need that money right now. So what I do is I have it in a drip where the banks automatically take my cash dividend and repurchase more Enbridge security stock. So it keeps compounding. And at any time, if I want to withdraw and take money out, I can do that at any time. But right now, I have it compounding until I decide to say, that's enough. I'm ready to go lay on the beach and I'm done. I'm retired. And that's what passive income is, guys. So read that blog. It will help you out. Guys, here's the Jackson Hole Symposium. So this was earlier this week. We had that blog to get you guys to understand the importance of this week's big event. So guys, we'll continue to do this. You know, some of you guys have risk management questions. Some of you guys want to learn about a body of a candlestick, compounding. Some of you guys, how to trade news, wicks on candlesticks, some securities like Eldorado Gold, silver core companies. So anything. We talked about Cracker Barrel, you know, just some stupid things like that. Changing the logo could cause the share price to go down. The Roblox, when I was telling you, they have fraud investigations. They're getting sued by states. What they're doing, you know, like with children. As soon as I picked up on that, I saw it was trading at $126. I went to the option chain and I bought puts. Any negative information lawsuits is going to drop the share price. Shareholders are probably going to exit, you know, so it dropped down to $112 and I made some money just shorting that company this week. So there's so much opportunity, but it's a lot to, you know, talk about. Sometimes if I was just talking one session just about how to short a company, someone's going to say, Ron, what about gold? What about this? So sometimes we got to have some structure. We'll have certain calls in the group on Zoom for education where we'll just be talking about looking for opportunities, how to short these companies or how to buy a company in the news, things like that, guys. And that's what option chains are for. If you don't want to buy actual physical stock of the security or short the security with shares, you can look at the option chain. Can we show us how to do both? All of it. I'm going to show us all of it. Let me just get through the month of August. It's the summer months over here. I'm renovating my home. It'll all be done in September. Then we go back to normal life. And then I'll be in here with you guys every single day, different sessions, showing you guys different things. Okay. And yeah, there is a message from Stock Sniper Trading on the YouTube, guys. Perfect, guys. If you want to join the team, there is a link available. And with a, you get a $10,000 Fixify account, so that will be included. So hopefully you guys do take that opportunity and do something with that account, guys. Okay, so gold has not pulled back. It's still driving. Okay, we haven't pulled back as of yet on NASDAQ or US30. So at some point, maybe it will. Maybe it will continue driving. Okay, but I had a blast, guys. Thank you guys so much. Thanks for the link provided for Powell. That was awesome. How we could listen in on it as well. And guys, September is a big month. September we have FOMC. I believe it's September 5th or 6th. This is the first Friday of September. Or sorry, NFP. My bad. NFP, non-farm payroll. And then September, I believe 16 is the next FOMC event with Powell. And is he gonna cut 0.25%? Man, that's going to be so big for the markets if he can do it. So, guys, it's great. Markets are pumping. Gold is pumping. Wall Street is pumping. Crypto is pumping. It's good to be alive. So enjoy your weekend with your family and friends. We'll see you guys. God bless everyone. Thank you guys for all the likes. Subscribe to the channel. We do appreciate you guys. Thank you guys so much for everything. This is amazing. We're almost at 83,000 subscribers. 2 more and we're going to hit 850. Thank you guys so much. Look how we're breaking out all-time highs. So guys, this is awesome. You know, Dave and I never thought we could get to 10,000 subscribers or 1,000, let alone 100,000. So this is amazing. But it's been almost 6 years of hard work every single day by the both of us in here. So, and we're going to constantly continue to do this, guys. So thank you guys. We appreciate you guys. Continue learning. Man, guys, when you get a taste of financial freedom, you guys are going to love it. So let's all strive to that, but be smart. Treat trading like a business, not like a casino. If you can listen to your uncle, you know, your uncle that smokes all day, he's got a little knowledge, but don't do what I did. I used to gamble when I first started full port thinking I'm going to become a millionaire, and I lost everything. And it took me years and years to even think about recovering all of that money. But now that I've recovered it, I trade very smart. Trade very calculated. I trade with high probable setups, good risk management, and daily goals. As soon as you hit your daily goal, I love it, guys. You guys in Zoom and YouTube now is walking away and going on with your day. You know how many years it took me to realize that? So thank you, guys. You guys are learning the proper way of trading, and it's amazing watching you guys. You know, I'm watching your journey as well, like you're watching my journey. So thank you guys so much. I appreciate you guys. The Jays will win the World Series before Ron starts options. Probably, Danny. But we'll get it started. Options are not that difficult, guys. You know, it's just look at a company. Is it going up or down? You know, buy a put if it's going down, buy a call option if it's going up. And then the next thing is just the expiration date. You have the ones that expire every Friday, your weeklies. You got your monthlies, and then you got your leaps, what are in the quarterlies. And they have a different price tag. It's just like a coupon. The ones that, like Friday, if I want to scalp right now options, they're dirt cheap right now because they're expiring at 4 p.m. today. So I could scalp the shit out of some options right now at a very low price. If I hit the direction, I'll make a good premium on them. But if I'm looking for next Fridays, they're a little bit more expensive because I have an entire week to reach that strike price. If I look at the monthlies, you know, they're a little bit more expensive because you have an entire month to hit that. So that's the only difference, guys. That's in a nutshell of how they work. You know, it's not rocket science, but I'd like to give you a detailed breakdown with definitions so you can learn what is implied volatility, theta, you know, the beta, like they're called the Greeks, you know, not our Greek friends, but they're called the Greeks. Those are those mathematics, the theta, you know, when we talk about the delta in volume and things like that. So, that's what we'll talk about. Okay, guys? Thank you guys so much. God bless everyone. I appreciate you guys. Have an amazing weekend. And we'll see you guys Monday morning, early, 6 a.m. Eastern. Okay? Don't forget, 6 a.m. We're going to switch the timing. Have a good day, guys. Wow, I sat in this chair for over 5 hours and haven't moved. So I got to go stretch. I'll see you guys. Have a good weekend, everyone. Enjoy the rest of your day and careful trading today. If you hit your goals, close up the computer. Get out of here. Thanks, guys. Have a good day, everyone. Have a good weekend. Go Powell. Danny, I think I'll do options before the that I'll bet you on that. Do the options before we try to make moves with you.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.